What is up, yo? What is up for everyone on the YouTube replay? Hope you're having a great day, yo. This is a super important day for me because my largest holding reports earnings today. For me, they're nearly a $10,000 position for me, and I've only put $5,000 into this stock, but they're up $5,500. And this is Comfort Systems FIX right here, and today is October 23rd. Today's the day. Tonight's the night, as Dexter would say. So yeah, we're going to get earnings from Comfort Systems. We actually had earnings report from a company in our main Robinhood portfolio. So let me just start with a quick portfolio update. Then we'll get into some of the stocks that you guys got in the chat here. So yeah, the one stock that did report earnings yesterday was URI United Rentals, and they're down 6% on the day. But honestly, it's no big deal. I mean, even the past 3 months, even after this dip, they're still up 16% the past 3 months, and they're still up 31% year to date. And yeah, we're still up 49%. No big deal. If anything, I'd like to maybe buy more of United Rentals if I saw them at a good price. But yeah, we're down 0.24% of the day. Year to date, we're still doing pretty good. We're up 16% year to date. Let me check out the Qs real quick. Wow, look at that. Yo, congrats if you're in stocks right now. Is that like a near all-time high on the QQQ right now? I mean, new intraday high of 0.8%. So, yo, go check your portfolio. Oh, my goodness. Is that Robinhood and SoFi up 5%? Yo, I can't wait to check my Weebull portfolio after this. I really haven't looked at the market too much today. So, yeah, this is our main account. We also have a Roth IRA. I made some major changes. Oh, yo, what up, David? We'll look at Netflix, dude. Netflix is so interesting. So, yeah, I made some changes to my Roth IRA. Again, I'm probably going to make even more changes and maybe even sell some of the stocks I bought in here. But I bought a share of AbbVie. That's like a great, just never sell stock. AbbVie is a beast of a company. So I got AbbVie stock, one share of them. And I also bought 20 shares of Perimeter Solutions, number one flame retardant play out there. They're the only like FDA approved, or not FDA, like ESG approved. I don't want to say that word because it might get kicked me off TikTok, but anyway, I'm going to make a video about Perimeter Solutions soon. They're a fire safety company. So yeah, that's our, let me get back to our Weebull portfolio right here. So this is what's really interesting. We're up 1.1% of the day, and all time, I love being fully transparent. Our open profit and losses were up 20% all time in here. But check this out. Here's what's crazy. We have some winners, crazy winners, and some crazy losers in here today. Like Super Micro's down 7, Calm's down a bit. But look what's up on the day. Dave, we're almost up 200% on this company. Which is just insane. We bought them literally in April of this year. Robinhood's up 5.5, SoFi's up 5, Futu's a bit green, Reddit's green, Axon, hey, we're almost now total return green on Axon again. That's your number one drone defense play out there. I've looked at all the drone stocks out there, and to be honest with you, like, even though this is so expensive, like more expensive than Palantir, more expensive than Tesla, I love them. I mean, they're also mainly a body cam police station play, but they're so cool. And then finally, yeah, you're right, New York, you were right. We got FIX, my largest holding today. Comfort Systems reports earnings today, and it's literally a $10,000 position for me, and it grew to that size. Hey, what up, Cruz? He said Novo Nordisk. Yeah, hey, actually, I want to get to Netflix real quick, then we'll check out Novo Nordisk. That's your like Ozempic play. Hey, what up, Daniel? IRDM, we'll get to that one. Inva, we'll check out all these stocks right here. What up, man? We'll maybe Big Bear AI as well. So here's Netflix right here. I mean, just a great never sell stock. But I think the reason they're falling right now is just because they need to get back down to a more reasonable multiple. The earnings weren't bad. The earnings actually, well, here were the actual numbers. They met on expectations. They missed on net income, though. Was that real? Oh, that was real. So they missed on net income and they missed on EBITDA. And again, when you're a high growth PE stock, again, the PE ratio, which is price to net income, they trade at 46 times net income. It's okay to have a premium valuation as long as you're high growth, and any miss on the growth expectations, will collapse the stock price. So I would love to own Netflix. They have great numbers. Like even still, the net income missed on numbers, like it still grew 8% year over year. They're making basically 2 to 3 billion of after-tax net income a quarter. Same with FCF, which is free cash flow. They made 2.66 billion, up 22%. So I still love their numbers, but again, it's still too expensive. And here's some cool metrics. Their premium subscribers, 301 million. This is their ARPU, or average monthly revenue per paying user, is $11.69. Yeah, valuation is still a little too high. So yeah, let's check out Novo Nordisk right here. This is the company that owns, hey, what's up, Haydex? Dude, thanks for the pumpkin there. Yo, Thanks, man. So Novo Nordisk right here. This is the company that owns Ozempic and Wegovy. So Elon Musk is on Ozempic. It's that weight loss thing. This stock is the same price that it was in 2021. If you're wondering why is the stock collapsed so much from its peak, and again, I think it's pretty much priced in at this point. But they're losing their exclusivity, their patent, basically for these GLP-1 things like Ozempic. Anyone will be able to use their formula for Ozempic in a couple years. And gang, what's going to happen to the EPS next quarter? Looks like EPS is expected to drop off. Well, that's probably just normal. Anyway, their numbers, like this is the thing. I still like this one because their numbers are still good. I mean, check that out. They're still doing $4 billion plus a quarter. The net income grew 45%. You get a 3.36% dividend. But I think that what's putting away on the PE ratio is just that future uncertainty. But we can also go read what the Morningstar research says. I know there's a little bit of increased competition from like Eli Lilly. Yeah. I didn't know they had a pill version. That's really interesting. Well, anyway, okay, let's go on to the next stock. I think I wouldn't have them as a huge position, to be honest with you. But Daniel said IRDM stock. What is this one? Is this Iridium Communications? So a small company, they were $2 billion. Yikes, they're the same prices they were back in 2018. So you bought the stock, like 7 years ago. You're flat on your position. Let's see, are they a slow grower? Well, actually, they are growing. That's the good news. They are growing, but notice it's like single digits, 7, 5, 4. So it's a bit slower growing, but is that real? There was a little one-time adjustment. They're still, at least they're making net income every quarter. They're making 20 to 35 mil a quarter. Hey, Adrian, dude, what's up, dude? You see Qubits? It initially tanked and now it's like up a bunch, I think. I haven't looked at them in a minute. But yeah, it looks like Iridium, if we look at their numbers the past couple quarters, the orange lines, what the analysts expect, huge beat on revenue, big beat on net income and on EBITDA that quarter. So, but there's something analysts don't, or something bad happened here. They still gap down on earnings and then gap down again. I'd be careful. What's the yield? Get a 3% yield. I'd just be careful with that one. Nothing's really blowing me away there. Hey, what up, Sermon? Good to see you. So, ENVA. Let's do this one. Enova. Hey, this one's actually on my watch list right here. Yeah, hey, we'll probably not get to Rigetti. I don't know. Hey, try not to spam there. Yeah, we'll maybe get to that one. That's just a momentum play. Yeah, you know what? We'll look at Rigetti. Okay, we'll look at it after this. I'll warn you now, there's nothing good there except momentum, but we'll look at it. But this is Enova right here. This is a $2.9 billion company. On this channel specifically, we like looking for stocks. Like if you're going to buy a stock like at all-time highs or at all-time lows, I want to buy the stock that has good fundamentals on top of that. Not just because the RSI says whatever, like, as you know, I like looking at fundamentals because the fundamentals outshine in the long run. It's the reason Palantir's at all-time highs and the reason Lucid's at all-time lows. Fundamentals outshine in the long run, but there is some momentum right now in this market. But check this out. So what does this company do? They do consumer loans and finance receivables revenue, and then small SBA loans, small business loans. Hey, look at the growth here. I mean, this is a growthy business. The revenue's up 29 after it grew 32. Let's go look at the profits here. Yeah, wow. So the sales are up 21. So the revenue's up 21, but the net income's up by 41, which means they're expanding their net margins. That's great news. So honestly, yeah, that's why they're on my watch list. I like those numbers there. So let's pull up Rigetti right here. RGTI. Here's why. Again, congrats if you own this one because you're probably up on your position because of all the crazy momentum. But here's why I just stay away from this stock, in my opinion. If we look in the top right, they're a $12.4 billion company. Now, I feel like I've been in the market for a while. I know what a $12 billion company should look like. Like, in my opinion, it's tough to pay a $12 billion market cap for a company that did $1 million of revenue and it fell 41%, fell 50, fell 33. Like, there's no fundamentals here. It's a pure momentum play, basically. It's a quantum momentum play. But you're paying. Again, most people who are buying this are probably swing trading, and that's the thing you want to do. And I wouldn't care if you did, like, you should swing trade this short term, but don't buy this and just never sell it, in my opinion. I mean, you're paying $12 billion market cap for a basically revenueless company where sales are down 42%. You're paying for so much hopium, future hopium. It's a tough risk to reward, I think. But yeah, they've still done great. Hey, Avon said APLD. You know who actually owns APLD? Is the homie Nvidia. Nvidia is so big that they own some individual companies. Their main holding is CoreWeave, as we know, but their second largest holding is actually APLD. Let's check this out right here. So, Novo Nordisk has earnings tonight. Is that the one you're talking about? That'll be interesting. But actually, we'll go check who reports earnings after this. But yeah, APLD right here. Oh, look at that. There's some news. APLD signs $5 billion AI data center lease in North Dakota. Well, that's interesting. Looks like they're opening up a new data center. That'll bring some nice future growth. APLD. Okay. Well, let's just go to their numbers right here again. The reason the stock went up let me zoom in here. The reason they gapped up on this candle specifically on that day is because they reported earnings and their earnings were really good. Again, here's what we can see. The orange line's what the analysts expected. Analysts were expecting 45 mil. Well, they reported 64 mil. So they beat on revenue. And if we go to the EPS, which is just net income, they were expected to lose 13 cents of EPS and they only lost 7. So no wonder they're doing so good. So I do like them. I do still think the valuation's a bit tough to pay. They're probably overvalued, but hey, Nvidia owns them. They're growing. This is a data center hosting business, basically. Yeah, look at that. Data center hosting, high performance compute. So yeah, and they got a new $5 billion data center investment. So that's interesting. What website? Yo, hey, by the way, this is a brokerage where you get stocks on. Yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. And full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks or something. But it's a free brokerage. You know. By the way, all these brokerages are all linked in the link tree in my bio. But the reason I'm on that one so much is because it's the most useful one for actually analyzing stuff. Okay, so, SoFi. And let me go to Nvidia. What up, Aiden? We'll look at Nvidia, then we'll get to SoFi. I do own SoFi, by the way. I regret every share I've ever sold a SoFi, but we're still up like 4x on it. But here's Nvidia right here. I think if you're looking for a semiconductor play, hey, again, GC, this is a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. This is my favorite brokerage right here. They ask you for a bunch of information. But anyway, here's Nvidia right here. Here's what I love about them, but here's also why I wouldn't buy this stock. If you look at the top right, the market cap, the whole company of Nvidia is worth $4.4 trillion. So I think it's a tough double from here. So that's actually why for my semiconductor play, I actually bought AMD Dizzle. So I think it's just a law of large numbers point of view. If you look at the top right, the market cap, and AMD is worth $378 billion. So I feel like it's an easier double. Hey, thanks for the follow, man. I appreciate that. Yeah, hey, by the way, if y'all want to hit the follow button, we stream every day. And it's not like AMD has been underperforming Nvidia like crazy. It's close to an all-time high today. And so I do like AMD, but here's also why I think Nvidia is just going to continue to be a winner as well. But I think it's a tough double, like if you get what I mean here. But check this out. Obviously, we know they have a GPU market share of 24% market share, crazy. They also have this automotive software that companies license from Nvidia, like Lucid licenses their automotive revenue out to compete with Tesla, which is pretty interesting. But anyway, the reason Nvidia is such a beast of a company, if we go to their main business right here, like what other company grows like this? I mean, look at these year-over-year growth rates in the number down here, like 100%, 200, 400, like insane, like annual basis, boom. And, not just on the revenue, but the real after-tax net income. They made $26 billion of after-tax net income this quarter. I mean, that's insane. They legit have 56% net margin. So you can spend $100 on one of their GPUs. They legit keep $56 of it, even after paying taxes. So they print money. It's because all of their customers, their main customers, are the most cash-rich companies out there. OpenAI, Oracle, even the other Mag 7, Google, Amazon, Meta, they're all just handing Nvidia money because they need the GPUs. So they've been great. I say look elsewhere beside. I would hold Nvidia, and I would call no one crazy for owning Nvidia. I wouldn't have it as like a major size position though. I'd probably invest more of like the Nvidia ecosystem. Like I've also liked Amphenol Group, and they're at an all-time high today. Amphenol Group is the one supplying Nvidia with their copper cables, because Nvidia has the NVLink spine product. It uses 2 miles of copper cables in this one little box, and Amphenol is the one who mainly supplies that for them, which is pretty cool. So, I like to invest in the whole ecosystem from the people who install the chips, and this actually hasn't been too great of an investment. Supermicro Computer, I think they're down bad on the day. Will it show? Yeah, Supermicro is down 8% on the day. Supermicro installs the chips for you. Comfort Systems right here cools down the servers for you with their cooling pipes. So anyway, let's see. Hey, what up, Justy? Good to see you. Yeah, hey, by the way, someone said what app you're using. I don't know which app you're talking about there. By the way, all of these are brokerages right here where you buy stocks on. If you want to get any of these brokerages, they're all in the link tree in my bio. It's where you buy stocks on. So they ask you, you get a tax form and stuff. So, okay. It's hard to invest on fundamentals when companies like Beyond Meat make people rich overnight. Well, actually, Beyond Meat hasn't made anyone rich overnight unless they bought the day before. Most people, again, I get what you mean there. You're right. There's a lot of momentum, especially in right now's market, where I've seen a lot of like basically revenue-less quantum stocks go crazy. A lot of revenue-less nuclear SMR startups just go nuts. Uranium plays yeah, look at me on me. Anyway, let's keep going here. AST driving me crazy. I'm thinking of letting it go. Can we check? Let's check. Wait, AST. Let me know which one you're talking about here. This says there's Astron Connect, AUS Net. Let me know which one you're talking about there, Justy. We'll check that stock out right there. All right, let's see. Do you swing trade or buy and hold? Yeah, well, actually, I have a different goal with each portfolio. This one right here, if you look at the top left, is called my buy and never sell portfolio. But if I head over here to this account, this is like my swing trade portfolio where I don't have any I'd like to buy growthy names in here that we also kind of diamond hand a lot of these stocks. But again, a lot of these, I regret every share I've ever held a Robinhood, for example. Check this out. L of a sell order here. And it made sense why I did it, but I sold 50 shares at $36 a share for a 3x profit. I 3x my money and sold most of my shares, but that was the worst decision ever. All right, super micro buy. No, I'll go over why I don't love super micro stock right here. They just don't have pricing power. They just sell a commodity. Dell is really coming for them as well. They just have no margin anymore. They're giving customers these bulk orders, like their sales are growing, but the margins are collapsing. Here's the thing I find bad about super micro, why I wouldn't buy this stock. Really over $40. Wouldn't touch super micro over $40 a share. But look at the revenue. The revenue's up 7.5. So the revenue grew. Revenue's up 7, but the net income is down by 35. And that's not some one-time adjustment either. That's real. So that means the margins collapsed. A legit low single digit 3.3% net margin. It used to be great, it's tough. So that's why I be careful. But Supermicro has been benefiting from like the new OpenAI buying a bunch of AMD chips is going to use Supermicro to install it. Like Supermicro gets direct shout outs from Nvidia for installing the Blackwell chips like perfectly. I own them, but I own them a lot. I bought them during their freaking accounting shenanigans when the company was on this day. This was crazy. Supermicro was supposed to report earnings this day. I was there. I was waiting for it because it was fun watching. I was waiting for Supermicro to report earnings, and the time went by. Then they didn't report it their time, and then they didn't report it all that day, and the investors freaked. And so I decided to buy a little after that, and I've just been holding on to my 10 shares ever since. Can you do next? Is that opened or not open door? Is that just next door? What is that? Or next decade? I don't even know what next door is. I might have just made something up there. Okay, but here's next decade. The stock isn't done too well. It's just lower than it was in 2018 without paying a dividend. So that is rough. Wow. $1.5 billion company. Oh, they're revenueless. So when we go to revenue right here, that might explain it. It says no data because they've never sold anything. They've never sold a product or a service before. So no revenue. Whoa, losing 40 to 50 million a quarter. That's rough. I can see why this stock is kind of at all-time lows. They're just bleeding through 40 mil a quarter, which is that's like 4% of the company, 4% of the company a quarter. I would stay away from them until they finally have some revenue. I'd rather miss out on some potential gains, but oh, hey, what up, Rage? Hey, next door. Hey, thanks. Yeah, hey, we just looked at Netflix. In a little, we'll look at them. Yo, Justy, did you answer my question? What was the ticker symbol or the name of the company you wanted me to look at? I can still do that one. Yo, Dan33, good to see you, my friend. He said FMX stock. Let's do it. So this is FEMSA. Let's see what they do. How about Unity? Hey, what up, Ed? And what up, Jai Kwai? Oh, I'm probably saying your name so wrong. Or Giaqui. How's it going? I'm probably fumbling your name. I'm so sorry. But thank you. We'll check out Unity for sure. Let's check this out. So this is FEMSA. This is a $33 billion company. They've been flat for a while, but let's go look at their numbers. Oh, so they're a Mexican company. So we're going to go ahead and convert their currency from we're going to convert it to USD. What do the multiple is low. They trade at 23 times net income. Oh, wait, Coca-Cola. So they might be a Coca-Cola bottler, but that's just one of their businesses. Then they're in health. fuel. So they're kind of just like a all-in-one. They're like a whole diversified industry. So yeah, 65% of the revenue comes from Mexico, 10% Brazil, then Central America 7. But yeah, so it's mainly like a South American, like diversified play. I don't even know, like Coca-Cola play, healthcare play, and an oil play or something. Hey, are they growing? So it's a bit of a slow grower. That's one thing. That's a lot of revenue though. And this is in USD as well. Nearly 10 billion in revenue a quarter, but it's only up 4%. Last quarter, it was down 10. So, and then they are making good net income every quarter. But I love everything you are. Hey, thanks. I appreciate that. So yeah, I like that they're making net income every quarter. I would just maybe be careful with that one. Oh, you get a nice 3.8% yield. I don't know if I'd expect them to outperform in the long run. Like, yeah, dang, they've been flat since yet. Oh, 2012. I thought that said 2021. Forgive me. No, this stock has been flat since 2012. All right, I'd be careful with that one. Basically, maybe it's just because they're not on a, they're not part of the U.S. economy, which has been booming past couple of years. What app is this? Yo, hey, Hamad, what up, dude? Yeah, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you go and deposit $100, we'll both get some free stocks. Full disclosure. Can you explain Vanguard? Yeah, Vanguard is just they're just an asset manager, kind of like a BlackRock. Where like if you ever go to a stock like Nvidia, for example, if you go to Nvidia or just any stock ever, you're like, whoa, Vanguard owns 9.2% of all of Nvidia. It's actually because of Vanguard's ETF. Have you ever heard of the Vanguard S&P 500? Whenever you go put $100 into the Vanguard S&P 500, they thus at the end of the day, after a while, like it will eventually go into Nvidia stock. So that's what it's managing assets for you. So it's not exactly Vanguard that owns it. They're just managing it for people like you and me, but it just shows it as Vanguard. Ooh, so let's check out Oscar right here. This is one of your Medicare, Medicaid growthy plays. Oh yeah, we'll look at ISRG after this, and then we'll also get to Unity. Oh, ISRG went nuts. Congrats to anyone owning that stock. So here's Oscar Health. They're kind of just like a competitor to UnitedHealth Group, another insurance play. But check out, this is what I find fascinating about Oscar Health is how growthy they are. Like, check this out. For the full year 2020, the revenue was $580 million. Now it's $9.2 billion for the full year 2024. Just the most recent quarter, it was up 29% after it grew 45, after it grew 44, after it grew 92. I mean, they're on a streak of growth. They're still struggling with consistent net income, but it's getting better. I mean, it did worsen year over year, but they're interesting. I wouldn't probably have it as a huge size position. They've been flat for 5 years, but they're interesting. All right, so let's look at ISRG, then we'll get to Unity after this. So this is Intuitive Surgical. They just reported great numbers. Check out that gap up. So yeah, anyone owning this stock has got to be a happy shareholder. Let's see. So yeah, here's what the analyst expected. The orange line, a big beat on revenue, a monster beat on net income, and a monster beat on EBITDA. So it was a triple beat quarter that, if you just look at what they reported versus what the analysts expect, it always or usually explains why the stock gaps up or gaps down. Also, sometimes it includes the guidance. They could have bad numbers, but give great guidance like Oracle did. But look at this. The revenue grew 23 or 22.9, but the sales are up 23. And look at this. The net income's up 24. Like, this is insane. They're literally doing 600 to 700 million of net income a quarter. And that's not even the best part. They have no debt. This is a fortress of a balance sheet. They literally have, let's see, $4.9 billion of cash, up from 4.2. And that $4.9 billion of cash isn't just sitting there doing nothing. Again, since they have no debt, what's great about this high rate environment is they literally made the highest quarter of interest ever. They made, oh no, I clicked off it, $95 million just in interest. I mean, that's milking it. I mean, that's insane. So, oh yeah, I forgot to even tell you what this company does. They make those like screening machines that like where it like detects the metal and stuff. I forget what that's called. Anyway, but look at this. They sell those instruments, those huge medical devices. The revenue grew 20% after it grew 18, after 23. So the revenue is really growthy there. They also service the machines. This is their servicing revenue right here. And it's also really growthy, up 21 after 12. So all businesses are growing. They beat on every metric, but the valuation is still a little high here, but they definitely deserve a premium. Definitely. So here's Unity. I like ISRG. I wouldn't buy here after its rally. but I do like them. So here's Unity. I think this company kind of deserves to be at like, this was a $200 stock when the metaverse was all hyped, but now it's $36. I think they deserve that huge dip on Unity because they are losing a lot of money. If we go to their net income, it's getting better. That's the good news. Like they lost 15% less money than the previous year, but they're losing basically 100 million of net income a quarter, and that's not great. They're losing 100 million of net income a quarter, and look at the sales. Sales are down 2% after it fell 15. So they kind of lost the growth, and they're losing a lot of money. So it's one I just like to stay away from. But I love their software. I've used their software, and Rust, the game, my favorite game ever, is made in Unity. So great software. But after the CEO thing, they changed how they priced it and charged customers. Like there's some kinks that need to be worked out there. Let's see. Are you loading up on Progressive Corp? I did actually buy some more Progressive Corp. So yeah, I now have 4.1. I bought, what was it? I bought $77 worth of it. Yeah, hey, actually, can we not pin stocks? Wait, hold on here. Oh, hey, Justy, I appreciate that. Yeah, hey, don't do that, please. Hey, it's all good. I appreciate you, though. But yeah, here's Progressive Corp right here. This is a great insurance company, in my opinion, and the multiple is fair. I mean, if we go to the forward PE, it's kind of hard to see on the left there. They trade at 11.9 times 11 PE, which is pretty cool. And now, again, they missed on their expectations. They expected more net income growth. The net income grew by 12. Analysts were expecting like 15 to 20, but it's still, I'm happy with this. They're making $2.5 to $3 billion in net income a quarter. They're still really growthy. Like, check that out. The revenue just hits a new record every year, every quarter. So I just still like the numbers on that one. I'm like, even though they missed a little bit on what analysts expected, I still like the name. So yeah, I did buy like a little bit more. Someone, NBA said, I'm new to stocks. I don't understand. Well, hey, good to meet you, man. Hey, we're just looking at stocks here. Yo, what up, Alexis 409? Good to see you, man. So let's look at some more stocks here. Yeah, no, don't apologize there, Justy. I appreciate that. So USA Rare Earth. Yeah, if you got it, hey guys, if you have a stock you want to look at, let me know what the ticker symbol. Someone said IBM. Yo, Ant, what up, dude? Yeah, Ant, or IBM just reported earnings today. They initially were down 8%, but now they're only down 1%. So hey, looks like, let's go look at their numbers. Let's check it out. So here's what they reported. The orange signs, but the analysts expected, and this is updated. They reported earnings yesterday. They beat on revenue. They slightly missed on net income, but they beat on EBITDA. So it looks like it was a slight miss on net income, and that might be why the stock is rallying now, because analysts realize it's not the end of the world. They're trading at 33 times PE. Is that including... Actually, I remember they had this little one-time adjustment down here. They didn't actually lose net income that quarter. But anyway, yeah, look, they're making $1.5 to $2 billion a quarter, sometimes $3 billion. They're a big quantum play. Look how diversified the revenue streams are. Software, that was up 10% year over year. Consulting and infrastructure. So yeah, they have three main businesses. Can I see your stocks, please? Yeah. Hey, by the way, if you missed anything, I do stock portfolio updates all the time on my YouTube channel, but yeah, I have too many portfolios to show you every stock that I own. If you scroll back to the very beginning of the stream, though, I do a stock portfolio update at the very beginning and very end of every stream. I have way too many stocks for me to cover quickly here. But yeah, by the way, my YouTube channel is called Nathan Robert. I'm also streaming on there right now, so if you miss anything, you can rewind it. Sometimes I talk too fast, I'm sorry, but my YouTube channel is called Nathan Robert. You can just type into YouTube Nathan Robert. It's also in the link tree in my bio. All right, so... let's see. Ooh, T-Mobile, someone said. I love T-Mobile stock, and I think they're worth looking into. Now, the only reason that stock fell is because they guided, and this isn't even that big of a deal, they guided $500 million more of CapEx. I mean, that doesn't even they fell more than $500 million of market cap. I don't see why the stock is falling too bad. So they're down 4% of the day. I'm actually looking to buy this stock. Out of all the telecom plays, there's Verizon, AT&T, there's T-Mobile. This is the best one out there. AT&T and Verizon and AT&T are both at the same price as they were in 1998, and T-Mobile is up crazy. That's because they actually have good growth year numbers. Oh, so they just reported earnings. Let's see. So the revenue grew by 8.9. So the revenue's up by, oh my goodness, hold on here. Okay, so the revenue's up by 8.9, but the net income, was that real? So the net income did actually slightly fall year over year. So their margins fell. I guess it was it was a tough comp because we were comparing to a 42% year-over-year growth quarter. But still, they're making 2.5 to 3 billion of net income a quarter. You get a 1.5% dividend. But the best part about T-Mobile is the fact that what are they doing with this basically 3 billion of after-tax net income a quarter? Wow, the cash flow is up 21%. That's insane. But they pay a dividend. The dividend only cost $980 million. So what are they doing with all their leftover money? Well, since they have such a low dividend cost, they're deploying money in share buybacks. This is insane. Legit, they're spending 2.5 basically billion plus every quarter solely on share buybacks. That's insane. So not only, so look at this. If you go to the net income right here, the net income declined by 11. But watch this. So the net income's down by 11, but the net income per share is only down by 7.6. Because again, the share part of the ratio went down. The net income growth rate and the EPS growth rate should always be the exact same. The only thing that changes is if you've been diluted or if they bought back stock. And in this case, they bought back stock. Pretty cool. Ooh, how do you use this app or just saying, yeah, hey, by the way, yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there, my favorite app to buy stocks on. And I also, if you go to link tree in my bio, I have like the sixth link there, I have a tutorial on how to use this app. I show you all my favorite features. Like, yeah, there's the super investor tracker where you can track like Nancy Pelosi and all her, these are by SEC law, they have to make all their trades public. And you can like, if you wanted to, you could like batch trade, follow them into them. But anyway, let's keep going here. Yeah, link tree in bio, very first link. And in full disclosure, it is an affiliate link too. So if you go deposit $100, we'll both get some free stocks. But yeah, okay. Let's look at the Ondas company. Then we'll look at JPMorgan. So this is a stock that I don't love, to be honest with you. I think it's like just not worth owning. I don't know. So if we look at the top right there, they're a $390 million company. So a $390 million company, very small market cap. What does this company do? Well, 60% of all their sales come from diapers and wipes. And here's the thing that kind of disappoints me here. The revenue, the sales, the lifeblood of the company, it's only up 0.44. So yeah. So yeah, the revenue, the sales are only up 0.44. That doesn't really beat inflation. So that's what you gotta, they're just not too growthy. But they did get net income positive, which I like, but I don't know, nothing's really blowing me away there. So JPM, that's JPMorgan, right? So yeah, JPMorgan, probably the best bank out there. Yeah, JPMorgan and Goldman Sachs, they're like the two best performing banks out there. Like, none of the other banks even come close to how much they've appreciated in stock price. So JPMorgan right here, even if you buy the stock right now, you still get a good dividend. Check that out. A 1.88% dividend yield. So you get a 2% yield, and not only the 2% yield, but plus the couple percent, near close to 10% in stock price appreciation you've gotten every year. So congrats if you're a shareholder here. So yeah, commercial and investment bank, consumer and community banking, asset and wealth management. Yeah, look at this is their after-tax net income. I mean, this is insane. Legit 14 billion of net income every quarter. That's why this is a $800 billion market cap name. So pretty insane. Just throwing into your live nice. Hey, thanks, Benham. Yeah, hey, by the way, if anyone wants to hit the follow button, we stream every single day, sometimes twice a day. I sell nothing. Like, I have no course, book, WhatsApp, Telegram. I'll never follow you. I'll never DM you. Yeah, watch out for people impersonating me. So Disturbed said BYND. Yeah, hey, so this isn't a fundamental play. This is a short-term swing trade momentum stock that it probably will go bankrupt if someone doesn't like bail them out somehow. But yeah, if we look at the top right, the market cap here, they're worth 1.2 billion. That's after all of this crazy momentum. This stock was just 50 cents. Now it's $3. But here's the thing why I would just avoid this one. If we go to their net income, like, they lost 200 million of net income this year so far. That's 20% of the market cap, but they're losing all this net income and the business isn't even growing. Like, look at this. The revenue's down 19 after it fell 9, after it fell 31. Like, they are on a declining streak. So America's kind of said no to plant-based meat. Also, they have a super leveraged balance sheet. I don't know how they're going to pay off their debt. I mean, look at this. They already lose 40, 50 mil a quarter. How are they going to pay off all this liabilities? I mean, and their assets are half of the liabilities. So I could see why before today, this stock was at zero, because they were legit bankrupt. So you could right now capture the volatility and maybe juice some swing trade out of it. But I wouldn't trust that one in the long run. Hopefully that was helpful. Let's see here. It's AI, said AMAT stock. Let's do it. So, hey, what up? Maybe we'll get to Nike too. I sold out of Nike. Uh, so here's Applied Materials. They're nearly at an all-time high. So hey, congrats if you own this one. They're up 3.5% on the day, and they still traded a fair valuation, like trading at 27 times net income. So yeah, you go to the revenue right here. The revenue's up well a bit. That's probably why they're trading at this compared to the industry of probably lower PE, because they're a slow grower, like single digit growth rates, 7, 6, 6, 4, 5. So single digit growth rates, but they're still making good money. I mean, easily 1.5 to 2 billion of after tax net income a quarter. And you get a near 1% yield, safe payout ratio. They raise the dividend every year. They're like a cheap semi play. Let's see. Yeah, semiconductor systems. How's that doing? So anyway, yeah, I think I think they're doing some share buybacks as well. What app you use for buying Bitcoin and stocks? Yeah, hey, this one right here. Yeah, you can buy crypto and stocks on here. I actually don't own any crypto, but yeah, there's a lot of crypto you can buy on here. All these are tradable right here. Yeah, by the way, this is a brokerage right here. If you want to get it, it's in the link tree in my bio, the very first link there. It's a free brokerage, no fees or anything. It's free. But yeah, and it's full disclosure, it's an affiliate link too. So if you end up getting it and you deposit $100, we'll both get some like free stocks, a little share of Nvidia, which is kind of cool. All right. So let's look at Nike right here. So NKE, I actually sold out of this stock right here because as y'all know, I love looking at the financials, and I just didn't see the financial quality in Nike. It's kind of like a rebound play. So I sold all my shares of Nike. Here's what I saw that kind of just scared me away. If we go to the revenue right here, hey, they did report green numbers. So the revenue is finally up 1% year over year. So the revenue is up 1, but look at last quarter. The revenue fell by 12. So anyway, let's just look at this quarter though. The revenue is up by 1%. So sales are up by 1, but the net income fell by 31. And that's not some one-time adjustment either. Like that was real. And the same with last quarter as well. That was real, that 85% decline. And here's the thing. Nike also pays a dividend, and they couldn't afford the dividend. So check this out. Yeah, they made 727 mil of net income this quarter, 200 mil last quarter. But remember that they made 727 million of net income. The dividend cost 591 million. So the dividend cost 600 mil a quarter. So they were just able to barely afford it this quarter, and they couldn't afford it last quarter. So we really want to see the growth come back. But I think honestly, like the stock is bottom, like the bottom is in, because I think the sentiment's good now. The numbers can only go up from here. I don't think the numbers can get really worse than this. But yeah, their margins have just been really, like, look at their net margin. It's just collapsed from what it used to be. Yeah, I'd be careful with that one. Hey, Dinesh, I appreciate that. Hey, watch out for the person in chat there. Hold up. I can actually get that. There we go. Do you think Uber will be disrupted by autonomous vehicles? Yeah, I've heard about that, but honestly, Uber, you can actually now book autonomous driving cars through Uber. Like you can book a Waymo through Uber. Yeah, but I think it's definitely will probably hurt them again in the future, but I think that's so long in the future from now. But I do own Waymo. I love Waymo. And Waymo's partnered with Uber. So the 99th said BTQ. Is that the BTQ Technologies? Oh, I think this is just some like maybe quantum play. What's the market cap here? A $1 billion company. Well, let's hope they have revenue. No revenue. Well, I mean, there is some 48,000 of revenue. Losing $1 million a quarter. I mean, nothing's really blowing me away here. I mean, I just want to see real sales. But I think this one, congrats if you own this one. Let's see, software license and related consulting. Oh, so it's not a quantum name. So software license, huh? Well, there you go. I'd still be really careful just because they really don't have much revenue now. No way, yo. Shout out to Isaiah. No way, dude. Thanks for the Black Panthers, dude. I really appreciate that. Oh, we said ticker symbol HIVE. Oh, dude, I'm so sorry I didn't get to that one. Yeah, honestly, I don't love this one either. They're slowly converting from a Bitcoin mining company to like a data center hosting business. That's kind of why they've been rallying these past couple of days, because historically this has always just been a Bitcoin mining company. And when and they've actually been outperforming Bitcoin recently on the past couple of weeks here. Look at that. There's Bitcoin on the bottom, but yeah, when we scroll back from their peak, the stock peaked in 2021 when Bitcoin peaked, but then they fell when Bitcoin fell. They didn't recover like Bitcoin recovered. So I just don't know if I expect them to outperform Bitcoin in the long run, but I think maybe like they're turning into an IREN or like a small core weave with their converting. Anyway, I'd be careful with that one. It still probably will follow whatever Bitcoin does, or like a pseudo AI play. I don't know. Yo, SIPA said SPLG stock. Oh yeah, that's the S&P 500 ETF. So yeah, if you just want exposure to the S&P 500, which I totally recommend, just buy this ETF right here. A 0.02% expense ratio, like the lowest expense ratio way, and it just breaks your money up for you into the top 500 companies in the US by market cap. Nvidia, Apple, Microsoft. And hey, Isaiah, if you got another stock you want me to look at, let me know, dude. I still can't believe that Black Panther Paul. I really do appreciate that. So M. Mal said, can we look at SOUN, please? I'm holding. So this one's a half momentum, half real good fundamentals play. Like if you're a shareholder of SoundHound AI, there's one metric you want to watch, and that's this right here. Check this out. Their subscription service business. They have some audio subscription, and it's booming recently. I mean, I used to be a big nothing burger. I mean, if we zoom out, look at that. You can't even see it. It was like $400K a quarter. But look at these growth rates in the middle. Now it's 32 million this quarter. And at this growth rate, what's it going to be the same time next year? Also, we can see they're every quarter beating on the analyst expectations. The analysts expected 32 mil. Well, they reported 42 mil. No wonder they gapped up so much on earnings. I still wouldn't trust a lot of money with this name. But as long as they keep up this growth rate, I really like this. I mean, I love these growth rates, but losing 40 to 50 mil a quarter, but it's no big deal as long as they grow. What's your favorite undervalued stock that's down a lot this year? Adobe, PayPal, Salesforce. Hey, that's a good question. I don't know. Progressive Corp would be up there. I also bought some Ferrari. I bought that one on the dip. I mean, that's what I actually bought, on the dip. Also bought the PE doesn't look too great, but it's the high quality ones that always will trade at a high PE, and we'll never get to that PE you want. What app is this? Yeah, hey, Ian, by the way, this is a brokerage, where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. My favorite brokerage. It's free, no fees or anything. What is this one? Corporate Mike said, I'm up 1,500% on ELTP. What is this one? Oh, hey, this is a micro cap. So they're worth $600 million, but it looks like they IPO'd in 2024 at 15 cents, and now it's 60 cents. So, hey, let's go see if they have numbers, though. That would be interesting. Abbreviated new, I don't want to say that word. Wow, look at the revenue. That's great. I mean, the revenue's up to 40 million, and it's actually, it says they lost net income, which I could look at why, but the actual core business made 21 mil of operating profit. So they must have insane gross margins. Whoa. The gross margins grew by 50. I'm actually going to add them to the watch list. You know what, Corporate Mike? Thank you. This one, again, it's a micro cap, but look at the cash flow too. Like something happened this quarter. Like, yeah, the net income went negative, and I actually like that because that'll scare some investors away. That was some one-time adjustment. They really should have. Really made 10 mil of net income, and when you make 10 mil of net income as a $650 million company, that's real interesting. Where are they headquartered? Let me see. Hopefully, U.S. Yep, U.S. Leaf Pharma. What do they do? We can check out the website right here. Specialty pharmaceutical company. Investor, you know what? We won't go look at that. Thanks for that, though. Again, micro cap, I have some of those. If we go over to Robinhood right here, like I have Delcath Systems. I mean, this company's worth, where's the market cap? 360 million. As much as I love these kind of names, I can't trust real money in them. I have $150 in this name. Like Cormedics, I love this one, but I only have $400 now. Like I love having fun money positions. Like I have so many stocks like that I love them. I love their numbers. Like that stock we just looked at, the ELTP one, but I can't trust real money in them. Like Axon or Power Solutions or Clear Secure. I love these companies. Like anyone heard of the Clear Secure like airport scanner things? They're all cool companies, but I can't trust like more than a couple $100 in them like I could with a lot of these safe Mag 7 blue chip names over here. Like, McDonald's, Google, Meta, United Rentals, Constellation Energy. Yeah, here's our portfolio on the day. We're down 0.5. Why are we down 0.5% when the market's like pretty much at all-time highs? Yo, congrats if you own stocks. New intraday high right now on the Qs. Go check your portfolio. You're probably up. But yeah, United Rentals reported earnings today, basically yesterday, and they're down 7. Okay, so let's see here. How do you get yourself back together after a big loss? Yo, I've been there. I learned like one of my biggest losses ever. It also taught me the biggest lesson. It taught me what kind of companies I don't want to invest in anymore. Like I used to never look at this stock right here. It's at an all-time low today, but I sold this one way back here. Look at this. There's the sell order. I sold all this stock on this day right here, and check out where I bought it. So that's where we sold it, way down there. And look how high we're going to scroll up here. We bought this stock. There was some of the buy orders. Yeah, dude. So we were buying this stock way up here. And then we sold it, like said, I lost a couple grand on this one. So why did this stock go to zero? I never looked at numbers before this. This is why. And I wish I had looked at this. I didn't realize I was buying a company that just burns money every quarter. This is the kind of company that deserves to keep on going lower and lower and lower and lower and lower. So not only are they burning through, look, they lost 66 million this quarter. So they lost 66 million. Well, the whole company is worth 250 million. That's a huge chunk of the market cap. Plus, they got a lot of debt to pay, and they're not growing either. So not only are they losing a bunch of net income, but the revenue is down 9 after it fell 27. Like the growth is gone. So that's one that it's kind of like Beyond Meat. They're just going to continue to kind of go lower. While yes, there'll be some momentum spikes, in the long run, those kind of just trend to go to zero. And that's why I focus so much on looking at numbers right here. And I don't sell them either because I trust the numbers. Does this app work in the UK? I don't know, actually. I don't know if this brokerage, I'm actually going to guess it's not. This brokerage is not supported in the UK, but you could try it. It's in the link tree in my bio, first link there. Hey, what up, Marcus? What are your thoughts on PayPal? So yeah, PayPal, this is basically a buyback play. I feel bad if you own this one because did you know PayPal is the same price that it was in 2017? So they kind of, their stock price looks like a DocuSign, a Roku, a Peloton, where they rallied up in 2022 or in 2021, but now they're just down like 50, 60%. And that's because they're not growing too much. If you go to the sales right here, like it's low single digit, 5, 1, 4, just barely keeps up with inflation, the sales growth. So we kind of just want to see more growth come back to the company. Here's what I love that they're doing buybacks, but I would love to see them do some sort of M&A. So if we go to their net income, like this is why I like them still. As a very small position, they're making easily $1 billion plus of net income a quarter. What is PayPal doing with $1 billion plus of net income a quarter because they don't pay a dividend? Well, they're just doing it all on share buybacks right now, spending over $1 billion in net income a quarter on buybacks. Here's what that does for you. So if we go to the net income's up by 11, but the net income per share is up by 19 because the share part of the ratio went down 8%. They have bought back, they've bought back 7.5% of all the shares just in the past year. So that's what's interesting, but I would have rather them, again, they spent, let's see how much. Yeah, they spent $9 billion doing that, buying back 8% of the company. I would imagine they spent $9 billion buying a new company. Like I remember when I don't know if they own Venmo, they own Honey, like buy another cool asset like that. I don't know. All right. CSGO market crashed. What the heck? CSGO skin market? I wonder I'd rather invest in the US stock market. They are trying, mate. Hey, what up, UZA? Good to see you. Can you explain how they made 10 million in net income? I forgot what I was talking about there, JVM. Look at Ubisoft. Hey, what's the ticker symbol for Ubisoft? And someone said LTC Properties. Yeah. So it's whenever I type in LTC, it goes to Litecoin, but there's actually a REIT right here, a senior housing care REIT. And again, these don't really outperform the market in the long run. Like this REIT is the same price that it was in 2013 in terms of share price. But here's the cool part. You also get, this is the main value you get here. You get a 6.5% dividend every year. And they haven't risen. The dividend stayed the same for 5 years. So the dividend, they also pay monthly. So you get a monthly dividend with this company. But again, it's the same price that it was in 2012. You're kind of just hoping for the 6%, 6.5% dividend, then pray for a 1% plus maybe 1 to 2% stock price appreciation. But I don't. If you're like 10 years away from retirement, I wouldn't touch this one unless I needed income. If you want a bit of a lower yielding one that I think is more growthy, CTRE. This is also a REIT, Care Trust REIT. This one's actually at an all-time high. I should have looked at their growth numbers. But the reason I like this one is because of how growthy they are. Look at this, CTRE. The sales are up 63 after it grew 33. Like these, it's over 100 million now for the first time ever. Pretty cool. Okay, and they have like half the yield, still a 3.5% yield. Idon said, is this pre-recorded? No, hey, this is live. What is up? I just wanted to see your stocks, man. Hey, no, it's all good. It's just, yeah, well, let me know what portfolio you want to see. I got too many portfolios here to cover. Yeah, hey, Mao, we literally looked at SoundHound AI the first time you said it. So we just looked at it. Sorry, I'm not going to look at it again. But if you got another stock, maybe let me know. By the way, if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, you can just type in YouTube Nathan Robert. All right, so let's see. Oh, you know what? I actually really like this stock, EXEL. This is another healthcare play. So I actually really, really like their numbers right here. So if we go to their, they sell basically this one prescription. So this is the company, basically this one product, but it's really growthy. The sales are up 19 after it grew 8, after it grew 20. So they're on a nice little growth streak. But if we go year over year, the sales did fall by 10% year over year. So it's why they gapped down so aggressive on earnings, because they weren't great. Sales are down 11, but they're still making great money. I mean, if we go to their net margin, 33% net margins. They're making 100 to 250 mil in net income a quarter. So, and look at that, their balance sheet is good too. Yeah, I think they have a lot of cash earning interest. Let me just check their interest number. Yeah, they made 16 million of just interest. They're making 10 to 20 mil of interest a quarter. Yeah, it's nice. So they have a lot of net cash on hand. What's your take on MUSA? Yo, actually, I should have announced this. I bought a share of MUSA right before the stream. Check that out. At $371 or $372, we bought another share of MUSA. This is my favorite oil play. Here's what I've noticed. Whenever oil goes up, this stock goes up more than oil, but whenever oil goes down, they fall less. And that's because of two things specifically with this company. If you're wondering, why is MUSA done so much better than Exxon? And again, if I kind of zoom in closely here, they do trend together. Like as we can see, ExxonMobil and MUSA rhyme together kind of just with oil prices. But over the long run, MUSA outperforms so crazy. Why? Because of their dividend rule. If we go to their dividend, they have a super low dividend. You go to ExxonMobil, Chevron, they have like 4% dividend yields, but this one only has a 0.5% dividend. And notice the payout ratio. This is an oil stock that doesn't suffocate themselves with the high payout ratio. So what are they doing with all their leftover money? Share buybacks. I kid you not. You ready for this? This is what I love. This company has bought back 36% of all the shares just since 2019. So legit, there's 36% less shares that exist since 2019. That's insane. Like if that was a dividend, if they instead spent all the money on dividend, you would have gotten like 6 to 8% a year in dividends. Okay, yeah, hey, let's do this one. Hey, try not to spam there. Hold on, CP. Sorry, man, I gotta mute you here. Yeah, hey guys, try not to spam like your stock a million times in a row. No one's been doing that. So, but okay, Kimson said, what do you think of SIA? What is that one? Let's do it. Wait, from Singapore. Which one is this? It must be this one. Is it called 6? I don't know if this is the one you're talking about. Hey, let me know if this is the one you're talking about here, Kimson. If it's called C6L, and we'll come back to it. So yeah, what up, nobody? Said he had a question. What's your question? Let's hear it. SLDP. Let's do it. Oh, wait. How do you value companies with negative free cash flow, negative net income? JVM, you basically do it off their future growth expectations. Like you just basically look at the sales at that point. And the reason OUST is rallying so much is because of how growthy the sales have been. Yeah, hey, we'll look at Verizon too. Verizon is not great. How do you think of Intel? Ooh, Intel has numbers today? That'll be interesting. And Carvana, Khalil, remember me look at Carvana. What up, MCO? What up, guys? What up, Jacob? So here's Solid Power right here. What's the market cap? A $1 billion company. So they're worth exactly $1 billion. Let's see. So they don't have too much revenue. 4 to 6 million of revenue a quarter. They lose 20 to 30 mil. And whenever you lose net income, that money has to come from somewhere. So notice how their assets just kind of decline every quarter. But notice they have a lot of assets. They can afford to lose money for a while longer because they have so much cash on hand and no debt to pay. So they're in a good position. So we kind of just want to see the growth. Ooh, the growth is expected to go down to 3.5 billion. But notice they beat every quarter on revenue. So maybe they're super wrong. And anywho, I think that might be why they gapped up so much on earnings, because it was such a big beat, and maybe they'll give good guidance for the future. What happens is, hey, by the way, this is a brokerage right here where you buy stocks on. They'll ask you, you get a tax form from them and everything. So if you want to get this brokerage, it's in the link tree in my bio, very first link there. So full disclosure, it is an affiliate link too. So if you go and deposit $100, we'll both get like some free stocks. So Good Time said, what do we think of Opendoor? So Opendoor, this is your pretty much interest rate sensitive momentum real estate company. What does this company do? They just flip houses. I've been to some before. Quite frankly, they're not good at flipping houses. But here's what, that doesn't matter though. It's because what happens in a low rate environment. Check out in 2021 and 2022, what happened when there was a zero rate environment. I mean, they're easily doing 4 to 5 bill a quarter, but look at what happened as the year went on. The sales fell 69, 70, 50, the sales plummeted, and they've kind of just been flat since. And honestly, the expectations aren't good either. Look at the sales. The revenue is supposed to go from 1.5 to just 540 million. The sales are supposed to plummet. So I don't know. It's really just momentum. And there was some super activist investor that's like, this is a $50 stock, and it momentumed it higher. And I don't know. I don't love it, but it's a swing trade kind of momentum play. And honestly, I can see why they're rallying so much. If we actually go to the interest rate cut probabilities, actually here's how you do that. You just go to markets right here. You go to stocks. Oh yeah, there's a lot of cool features right here. You can view all these different watch lists right here if you're looking for new sectors to buy. But anyway, look at this down here. Because on the October 29th meeting, literally this month, October 29th, isn't that far away, there's a 98% chance of a 25 basis point cut. And then in the December 10th meeting, there's another 89% chance of a 50 basis point cut. 10% chance of a 25 basis point cut. Just based off kind of the Fed dot plot expectations, they want it to be 3.63 by year end. So anyway, that's why a lot of the interest rate sensitive sectors, like some of the home builders, Warren Buffett's buying a bunch of the home builders. Let's see. Just want to say thank you for your wonderful show. I'll try to watch it every day. Hey, Food and Fun, dude, thank you so much. Yeah, hey, y'all, if you want to hit the follow button, we stream every day. We just look at stocks and stuff. Would you choose Visa or MasterCard if you had to? I would literally either one. They should perform nearly identical in the long run, but yeah, probably just Visa if I just had to. Okay, so yes, okay, let's do it. C6L. So this is a Singapore company. This is SIA. Someone said this was so we'll convert their currency to USD. So we're going to look at it in net income now. So full service carrier. I think someone said it was an airline, a Chinese airline, or travel and transportation. Yeah. So let's see, do they pay a dividend? You do get, you get a 7.2% dividend yield. And according to this, the payout ratio is only a 56%. So they have a safe payout ratio. But again, to kind of zoom out here, this stock, this stock is the same price that it was in 1993. So you bought the stock in 1993. It's the same price that it is today. Any news here? SIA Group reports 3.7% passenger growth. Singapore implements flight levy. Okay, whatever. I just don't love the airline industry. I wouldn't invest in a U.S. airline. I probably wouldn't invest in a Chinese one either. But hey, they had a nice yield. Actually, maybe I would invest in a Chinese. All right. All right. So let's see here. MLTX. What's this one? Hey, yo, what up, you won? Yo, we'll get to ONDS. Hey, sorry if I don't get to all the stocks. Or yeah, we'll get to ONDS, and then Wix. Yo, what up, Millers? He said, I love Wix, actually. I cannot type MLTX. So Moon Lake Immunotherapeutics. Oh, I'm guessing. I'm going to just take a guess here. I have no clue what this company does. I've never seen it before, but I'm guessing they were trying to release a product and it got FDA rejected. Just going to take a wild guess there, but yep. So look, it's a revenue-less company. I've seen this a million times. Revenue-less company. They have no sales. They're waiting for FDA approval. And then the only hope of them having of revenue in the future was them getting this product to market. but now they can't. So that's why the stock plummeted from legit 60 to 6, or it's 9 today. So you're pretty much just buying it for the cash on hand at this point. They're not going to be able to dilute. They can't issue their. It's almost like a cassava, dude. Just like that, waiting for that high expectations of releasing a product, but then the product just didn't work. Okay. Okay. If a company is increasing sales by what was that other one someone said? Where was it? ONDS. All right, let's get to this one. ONDS right here. Yo, no way. Hey, shout out to my friend Good Time on the YouTube stream with the $1.99 super chat. Dude, you just made my day. Yo, if you got another stock you want me to look at Good Time, let me know. I got you. So here's Ondas Holdings. Yeah, this is a LiDAR company, I believe. Let's see here. Ondas Autonomous Systems. What's the growth here? So the sales are up nice, but that's after they plummeted. So the revenue went from 900K to 6 million. That's good. The growth is back. So revenue of 6 million, what are analysts expecting? Check that out. Analysts are expecting 9 million. So think about it. If you kind of annualize that number, they're going to be making potentially 40 million of revenue a year, a huge step up from it's like, basically 12 million. They just fortified their balance sheet. Check that out. The liabilities went down and the assets went up. I bet, look at this. They just issued 50 million of shares, but I don't blame them. They probably did it at a good valuation. So, it's just the future growth here. I'd still be real careful with that one. Wouldn't have it as a huge size position, but they're interesting. Autonomous driving play or something. So, I make so much money off the dividends of BITO. Yeah, hey, I think this is a Bitcoin covered call play. Because we've overlaid BITO next to Bitcoin. As we can see, it's certainly not as growthy as Bitcoin, and that's because they sell calls on Bitcoin, so they don't capture the upside. But because they don't capture the upside of Bitcoin, they get paid a premium. So whatever premium they get, they just pay to you. Again, you're not expecting to outperform Bitcoin. You buy this to maximize your income. I think there's a high fee here too. What's the fee? 0.95. Well, 1% fee, not great, but you buy that to maximize your income, and nice. Yeah, you must make a lot off that. But you're not going to outperform total return, the S&P 500 on average. So let's look at Wix right here, the only publicly traded vibe coding play. And they basically just acquired this company and the only vibe coding play, and they're integrating it with their 300 million Wix users. And Wix, you probably heard of, they're actually coming for Shopify. I was looking at studies, people are converting over from Shopify to Wix, but this actually a more international play than a lot of these, because 55% of all the revenue is from the US. Then I was surprised to see, Europe is 25% of all the revenue, all the other countries 11. So the growth is nice here. Revenue is expected to continue to climbing higher. They're making net income every quarter. They had a huge beat on net income this quarter. Check this out. If we go to the net income, they're net income positive. So what are the gross margins here? Yeah, 69% gross margins. Now they're almost double-digit net margins. But I'm just curious to see the future growth of this one. Again, I'm totally biased. I do own them. They were worth I bought 5 shares of them. Oh, look at that. We're at a new intraday high. Let's go. Whoa, the whole market just is rallying up. Look at that. Where's our Wix? There's our Wix. So yeah, we are up barely, but they haven't done great the past 5 years. Look at them. They're down 50% the past 5 years. But as much as I love them, I wouldn't have it as a huge size position. So let's look at Verizon right here. VZ. Then we got to look at Perimeter Solutions. Yo, Tommy, that's my newest position. If anyone's wondering what's my newest stock here, Perimeter Solutions, pretty cool name. I made a little thing about it in the Discord, but okay, what up, Luffy? We'll look at MELI. And Carvana. No way, I forgot to do Carvana. We'll look at that one too. So here's Verizon. Here's a stock you buy for the income. So if we look at Verizon stock, hey, Royal Vibes, yo, thanks for the heart there, Royal Vibes. If you got a stock you want me to look at, let me know. Sorry, I'm just now seeing that. If you got a stock you want me to look at, let me know. But here's Verizon. Verizon is the exact same stock price that it was in 1997. So you bought the stock in 1997. It's the same price that it is today, unfortunately. And look at the yield here. You get a 7% dividend. That's the real value here, the 7% dividend. But I just don't you won't outperform the market in the long run. Why are they? I wonder if there's any specific. Well, let's go check out the news. Maybe we don't know it though. Yep. Telecom industry faces price war pressure amid T-Mobile competition. Hey, we use T-Mobile. Oh, dude, the government breaking up telecoms, the three businesses, has been like the best thing ever for consumers. I just saw like a Verizon ad that said, it literally was just like blunt. It's like, bring us your bill for the ad. And I took a screenshot of it. It said to my friend, because that was so funny. It's like, just show us your AT&T or T-Mobile bill and we'll just give you a better price. Like that's the marketing at this point they're doing. Okay. But out of all the telecom stops, I would go with the T-Mobile. If I had to buy one on the dip, I'd pick a T-Mobile, TMUS. I love Mint Mobile. The Ryan Reynolds ads are genius. They're not suffocating themselves with a high dividend, a 1.5% yield. That's why I think this one will be the most growth. Out of all three of those, I think that one, T-Mobile will have the best total perform in the future here. So Visa or MasterCard? Oh, let's do this one, Marcus. So you know who I would just pick Visa if I had to pick one. I just pick Visa. Actually, you know who else owns Visa? If we go to the Nancy Pelosi portfolio again, if you didn't know, all these super investors right here have to make all their trades public by SEC law, and we were able to view it. And yeah, she owns Visa in her portfolio right here. Oh, well, let's see what else this app is telling me. That they're saying that there is a bearish flag is forming. Okay, well, as you guys know, we like looking at the fundamentals. Verizon deserves to, or I mean, Visa, similar V word. But yeah, they're a great dividend grower. Like, check this out. You get a 0.66% yield, but notice the growth here. Every year, their dividend raises at a way faster rate than inflation. But honestly, that's not the best part. The best part about Visa is the share buybacks. Also, look at the net income. They're doing $5 billion of net income a quarter. Those small little credit card transaction fees that are slowly bankrupting us are making Visa a boatload of money. So what is Visa doing with $4 to $5 billion of after-tax net income a quarter? Well, like we know, they pay a dividend. The dividend only cost $1.15 billion. So what are they doing with the rest of their money? Check that out. At the top, they're spending $4 billion a quarter solely buying back their own shares. Here's what that does for you. Here's the benefit of that. If we go to the net income is up by 8%. But the net income per share is up by 12%. Remember, the EPS growth and the net income growth should always be the exact same. Only thing that changes it is the share part of the ratio. Whenever they buy back shares, it artificially makes the EPS go up, which then artificially makes the PE ratio go down, gives you more ownership in the company, makes the dividend cost less because they don't have to pay dividends to those shares. Share buybacks, in short, just force the stock to go up. So kind of cool. And I specifically look for companies that do share buybacks. All these companies, every single one of these do share buybacks. MUSA has bought back 36% of all the shares just since 2019. That's why if you look at all the other oil and gas plays, look, there's ExxonMobil at the bottom there. ExxonMobil's done pretty good. They're both oil and gas plays, but this one just does more share buybacks and way lower dividend. Ferrari just upped their buyback program. I think they just announced something like that. Yeah, look, Ferrari advances share buyback program with a 350 million there in euros, but 350 million euro raise. Dude, look at this company right here. This is Coca-Cola Consolidated. And sorry, I'm kind of ranting here, but check out the buybacks on this one. If we go to the net income's up by 8.4, but the net income per share is up by 16 because the share part of the ratio went down so much. And this isn't the normal Coke. This is Coca-Cola Consolidated, the bottler. That's why they've way outperformed normal Coca-Cola stock. But let's keep going here. Good time. Yo, thanks again for all the roses there. He said CTXR. Let's do it. So Citrus Pharmaceuticals. So I'd be so careful with this one. We normally don't even cover these kind of stocks. But just because of this right here, if you look at the top right, hey, dude, Ishwar, dude, I very much appreciate you joining from YouTube. I do appreciate that. Yeah, I got you. So if you look at the top right, the market cap, they're only worth 30 million. So these market caps, I don't even like, I would never basically consider a company worth under 100 million. And this one's at all-time lows. Let's see if we can figure out why, though. Normally the numbers explain it. So if we go to sales, it says no data because they've never sold anything. So it's a startup. They've never sold a product or a service, and they're losing 9 to 10 mil a quarter. That's the killer here. They lose 10 mil a quarter. The whole company is worth 30 million. There's bankruptcy, super high bankruptcy risk. No wonder they're at all-time lows. So just knowing that right there, the fact that they're worth 30 million and lose 10 mil a quarter, you just got to stay away, I think. Just from like logic, I don't know. It could be a fun swing trade though. Like I know Beyond Meat's going nuts today. Momentum. But operating expenses are also growing 80%. Could that be bad most of the time? No, JVM, I'm actually getting upset with Reddit about this. A company, if they're growing a bunch, should also grow their operating expenses, their CapEx at that same growth rate. So Mr. Phil said, what do you think of Alibaba? Let's do it. So this is basically your Chinese like e-commerce play. They own AliExpress, which is it, Amazon is like business to customer. Alibaba is more B2B, business to business, like Shopify websites buying stuff in bulk from Alibaba or AliExpress to sell on their own site. So it's more business to business, but there are some B2C. But look at this. They're Chinese, but we've converted the currency from yuan to USD. Look at this. Easily, like, if you average it out, like 4 billion of net income a quarter, and not just 4 billion net income. The free cash was a bit choppy, but we want the free cash flow to sometimes be negative. So yeah, Alibaba e-commerce group, that's basically half the revenue. They're also getting to the cloud play. Let's see. Oh yeah, look, it breaks it down. Cloud intelligence. Look at that. It's up 27% year over year. Nice little Chinese cloud play too. So there you go. They're trading at 19 times net income. Charlie Munger's last pick. So you get a 0.61% dividend yield too. Oh, hey, watch out for that guy in chat there. You see that guy? He said, first 5 people to DM me, I'll get $5,000. Well, unfortunately for him, I will have his account permanently banned because I know a guy. Okay, so let's see here. Yeah, hey, by the way, watch out for people impersonating me in chat. I'll never follow you, DM you. I don't sell anything. I have no course book, WhatsApp, nothing like that. So, okay, what is that? Is this like an app or what? Yeah, hey, Luca, by the way, this is a brokerage where you buy stocks on. If you want to get this brokerage, it's in the link tree in my bio, very first link there. It's where you buy stocks on, you get a tax form. This is a brokerage. Okay. But yeah, it's the lowest. By the way, all these brokerages I'm using are all in the link tree in my bio. You can buy stocks on any app that you want. But out of all the apps here, my favorite one is this one, of course. It's no fees at all. It's free. Doesn't cost anything. There's no commissions or anything. Collect that out of the way people are. Okay. Yeah, link tree. All of them are in the link tree in my bio, but this one's the first link there. Or you can just type in a Google broker called Moomoo. Okay. Do you do finance for a living? No, I wish. Yeah, I'm in college right now. Hey, look at that. We're up 3.3% of the day. Today, guys, today is such an insane day for me. You know why? Because my largest holding, I have 10 grand in this stock. My largest holding by far, reports earnings today in literally 2 hours. In 2 hours, I'm either going to make or lose a lot of money, but I'm not too worried because I'm confident in this name. They kind of need a healthy little down. I can't believe this has actually been, I think, one of the best performing stocks in the entire whole stock market. There's not many stocks that have kept just since 2019, they're up 1,000% plus, or I think like maybe 1,500. I don't know. Okay, they're an HVAC play. Yo, dude, Ishwar. Dude, we just looked at ONDS. We'll look at them in a second here. Oh, and check Amazon. Yeah, hey, we'll get to Amazon. Philip, what up, dude? Yeah, IBM, check this out. So they reported earnings this morning. The stock initially fell 8%, but now it's only down 1%. So, whoa, let me read this article up here. Raises full year outlook on AI infrastructure strength. So yeah, check that out. Here's where the revenue comes from. 43% software, 32% consulting, and 25% infrastructure. So I like how diversified that they are, and that may be why the stock is slowly now rotating higher. They're also a quantum play. And one other thing is it's a dividend play. Check that out. You get a 2.4% yield. They raise the dividend every year. Oh, dude, I feel so bad for taking so long. CVNA, we got to get to Carvana right now. I'm so sorry, Khalil. So here's Carvana right here. In my opinion, I don't believe this. I mean, this is insane. This company, if you're wondering why was the stock, $5, they were literally going bankrupt. They burned all the bondholders, and but then they got a loan, and things have just been up ever since. I can't believe it. Like if we go, here's what's crazy. They're making good money. That's why I can't hate on this name. I just don't like this industry. I don't know, car vending machine. Actually, one of my cars was through Carvana, but they're making a couple $100 million a quarter. Because if we used to zoom out, this is why the stock was going bankrupt. Look at that. You're like, dang, who could buy this? They're losing $500 million to $1 billion a quarter. But now they're actually making consistent money. As long as they can keep that up, I mean, that's so interesting. I just don't love the auto industry, but it looks like they're working stuff out. They're making good money. So let me get to MTN. Yeah, hey, Millers, we'll get to AMPX too. Don't worry. Sorry. Here's MTN right here. So This is Vail Resorts. They own a bunch of ski resorts. You've probably heard of some of them. Uh, there was a lot of boycotts at one of them, like kind of recently. But yeah, Vail Resorts. This is mainly a dividend play, and it's tough for them to afford the dividend. Here, I'll show you this. So check that out. You get a 5.8% dividend. So you get a basically 6% dividend. But let's go look at the net income. I can't remember here. So, oh yeah, that's real. So they have 2 quarters every year where they make net income, and then all the other, winter season, then they lose net income for the other 2 quarters. That actually, half the year it's warm, half the year it's cold. So that's how that works, I guess. But check that out. I guess if you average it out here, they lost 200 mil, 200 mil. So they're net making 50 to 60 million in net income a quarter the past year. Well, let's go see how much the dividend cost. The dividend cost 79 million. The cost of dividend just went down. Oh, they bought back 200 million of shares. What percent of the market cap is that? Oh, that was actually like 5% maybe. Hold up, let's see. So here's another way how you can check what percent of the company it was. Hey, no way, Justy. I wasn't scrolling down on the thing there. Justy, are you still in here? Thanks for the hanging lights gift. No way. Thank you so much, Justy. But yeah, check this out. I don't know. Wait. Oh yeah, here's what I was going to look at. The net income is down by 6, but the net income per share, is down by 8%. Well, I guess the share buybacks haven't been. I don't know. I don't know. Don't love that industry. Kind of like a resorts. I'd rather buy Disney stock for that. Their resorts. There's like PRKS, which I think owns this is Parks right here. PRKS. This is SeaWorld. There's also SPHR. There's has anyone heard of the Las Vegas Sphere? It's like where you go inside the sphere and it's like a cool little experience. That's most of their that's all of them. There's IMAX. IMAX is publicly traded. They're actually interesting. I don't know if I'd really expect them to outperform, but okay. Can you show us what stocks you have? Yeah, here are all the stocks that they own in here. How did you learn to analyze a stock? Yeah, I kind of just learned with time. What options do you recommend for trading apps? Yeah, hey, trader, I love this one right here. By the way, all these brokerages I love and I actually use all of them. But yeah, here's my favorite brokerage is this one right here, Moomoo. It's free. There's no fees or anything. Like with Robinhood, for this app, and I still use them. You have to pay $5 a month to get. Where is it? Yeah, you get a 3.75% APY on your cash, but you have to pay them $5 a month to get the 3.75% APY. But on Moomoo, there is no $5 a month. There is no commissions. There is no monthly fees or costs at all. It's free, and you get a 3.85% APY on your idle cash. So that's why I keep my cash in here. Anywho, if you want to get this brokerage, it's free. Again, it's in the link tree in my bio over here. First link there. But full disclosure, it is an affiliate link too. So if you go and deposit $100, we'll both actually get like a little fractional share of Nvidia, which is kind of cool. So yeah, it's a brokerage where you buy stocks on. So okay. Oh yeah, and if you're on the YouTube stream, it's linked in the description. And for everyone on TikTok, it's in the link tree in my bio. If you're on YouTube, it's in the description. Or you can just type it into Google. It's a broker called Moomoo. Okay, so let's look at MELI right here. So MELI, this is Mercado Libre. This is like, I think, the international Amazon play. They pretty much do what Amazon does. But if we go to where the revenue comes from, yeah, basically South American Amazon e-commerce play. So look at that. 44% of all the revenue, or 54% just comes from Brazil. And then Mexico is another 22. So literally just that is most of their revenue. Then they're in Argentina. So that's interesting. But yeah, if we go to where the revenue comes from, commerce services, then they're in financial services and income. How's that doing? Credit revenues, commerce product sales. So let me go to their revenue right here. So the revenue's up by 30. So they're growing very nicely. Check that out. Revenue's up 33, after grew 41. After grew 40, so they're on a streak of growth right here. And they're making pretty much look at the net income. They're making 500 mil in net income a quarter. So yeah, pretty cool. All right, so yeah, hey, BKLN, if you want to get this brokerage, it's in the link tree in my bio, very first link there. Yeah, it's just called Moomoo. If you want to use my affiliate link. Okay, so Let's see. Oh yeah, AMPX. Let's get to this one right here. AMPX. This is Ampress Technology. Hey, they're actually on my watch list. I do like this one. So Ampress Technology, $1.48 billion company. And I like them for the growth because check this out. If we go to the sales, this is good. I mean, again, it's really small numbers, so you never want to trust a meaningful amount of money in this name. But check this out. The revenue went from 3 mil to 15 million. That's a good growth rate from 3 mil to 15 mil. But look at the analyst expectations. It was 15 mil this quarter. They're expecting 20 mil in 2 quarters. And every quarter they're beating on expectations. So if they're expecting 20 mil, they'll probably actually report maybe 25 mil. Their battery segment play. Yeah, they've experiencing a lot of growth. It's kind of easy to grow from small numbers, but yeah. How are you reading the comments? Hey, I got the comments on my screen right now. By the way, I'm streaming on a computer right now. But I'm Apple playing my phone to my what app you using? Yeah, hey, again, by the way, this is a brokerage software where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. They ask for all your information. They send you a tax form and stuff, but it's where you buy stocks. Link tree in bio, very first link there. It is an affiliate link too. So let's see, Apple stock. Ooh, wait. Hey, what up, Z Weber? What up, dude? What up, broski? Good to see you. Motorola stock. Hey, give me the ticker symbol for Motorola. Yeah, hey, Tommy said the honest company. To be honest with you, this one just has no growth, and I don't like the industry. They basically are trying to market like healthy, like diapers and wipes that don't have chemicals in it for babies and stuff. I remember hearing the story about the founder and everything. The girl, I think she's no longer CEO anymore and stepped down. It was some famous person. I don't know, was it Kendra Scott? I don't even know, but it was a girl who wanted to make healthy stuff for kids. They just sell diapers and wipes, and they haven't been growing too much. Like if you go to the sales, they just sell a commodity. The revenue is up 0.44. So the sales, the lifeblood of the company, is up 0.44. I just don't, it doesn't really beat inflation. But what I do like is the fact that they also have more cash than debt. So they have a net cash position. I think 5 to 8% of the market cap is just their cash on hand, and they're making at least a couple million in the past 2 quarters. So that is good news. There's no bankruptcy risk here for sure. They have no debt or no net debt, making net income now. So, but we kind of just want to see, honestly, we want to see the growth come back. That we want to see the growth get back to, even mid double digits would be great again. Yeah, 0.44 sales growth isn't great. Oh yeah, I love the S&P 500. Yeah, I own a lot of, actually right here, this portfolio right here, every stock in here is in the S&P 500, every single one of these. Let's see how it's doing. Yo, new intraday high right now, basically on the market. Congrats if you own stocks, S&P 500 should nearly be at an all-time high. Yeah, that's crazy. Okay, so let's see. Ooh, Palantir stock. We haven't looked at Palantir this entire day. Actually, we're down on the day. We're down 0.3. That's because of United Rentals. They reported earnings yesterday, and the stock's down 8%. So, but all our other portfolios are really green. Dang, this one's going great. And we're up 3.2% on the day. Yo, my main holding in here, Comfort Systems, reports earnings in 2 hours. So exactly in 2 hours from now, they're going to report earnings, and I'm either going to make or lose a lot of money. Is it better to buy when buyers outweigh the sellers? I mean, it depends on if you're the mindset, if you're a trader or something. If it's a good quality stock at a good valuation, I mean, just buy it and never sell it, like Apple or Google. Oh, look at American Express after this. Remember when you spoke about Oklo? Do you recommend take it or keep the loss? Oh yeah, Oklo's one I don't love. We'll get to Oklo after this. Oh, it's SoFi. We have to look at SoFi too. There's a lot of names we need to look at here. Okay, so here's Palantir. This is one growth beast. Let's see if there's any news down here. Palantir and Lumen forged $200 million AI partnership. That's interesting. Palantir and Snowflake support. Well, Snowflake is Palantir's biggest competitor, and now they've partnered with them. That's kind of interesting. But anyway, check this out right here. Palantir, a lot of the revenue actually comes from the government. A lot of police stations use their software, the military, Air Force. Look at this. The revenue's up 40. This government revenue's up 49, after it grew 23, after it grew 15. The growth rate is growing here. So the revenue's at a record, and not just on the government revenue, but also the commercial side with other S&P 500 companies and mom and pop shops. That's up 46% year over year after going 33, after growing 11. So they have so much cool data. Even if you're an ice cream shop, I was sharing this thing, It'll tell you how many employees you want to have and on which day. Like, oh, on this random Tuesday, they're telling me to have 2 extra employees. Why? Oh, 2 soccer games get out at this time and it's just kind of cool. You can actually like get real use out of your data. But check this out. Super growthy. The revenue's up 48%. They did $1 billion of revenue. First ever $1 billion revenue quarter. Out of this $1 billion of revenue, 330 million of it was after-tax net income. They have a record 33% net margin, no debt at all, legit debt-free company, $6 billion of cash, up from $4 billion. Palantir is just a beast of a growth company. But the one thing that sucks is the valuation is insane. They traded 125 times revenue, not times net income or profits, but 125 times sales. It's insane. Yo, Meow. No way. Hey, thanks, Meow, for the pumpkin pie there. Yo, if you got a stock you want me to look at, let me know there. I appreciate that. So, okay, let's see. Oh wait, NOK stock. Let's look at NOK. Hey, what up, Looney? Good to see you, friend. Hope you're having a good day. So Nokia, this is, wow, they're up 10% of the day. Reports lower Q3 profit net sales rise. So they must have reported earnings. So check this out. They beat on revenue, they missed on net income, and beat on EBITDA. So they beat on EBITDA. So they had some sort of like one-time or some adjustment maybe. I don't know. But either way, the stock is up 10%. Maybe they gave good guidance. What are they in? Network infrastructure, mobile networks, cloud and networking services. If we zoom out on this stock, they're the same price as they were in 1998. But there is some momentum on it now, which is interesting. Sales above, Nokia signals Q4 net sales growth above 22% seasonality as AI and cloud demand surges. So there you go. Cloud and AI demand is causing the surge of future. So they gave good guidance. All right, so Tantha said Taiwan Semi. Let's do Taiwan Semi right here. Okay, then we'll get to American Express and maybe Global Ship Lease and Oklo. Sorry, I'm going so slow here. I apologize. But here's Taiwan Semi right here. This is a great semiconductor play, a great never sell name. If we look at it's like Nvidia with the higher yield. You get a 1% dividend yield. If you didn't know, Nvidia just designs their chips. All their chips are actually manufactured by Taiwan Semiconductor in Taiwan. Taiwan Semiconductor also just opened up a new they finished their Phoenix production. Taiwan Semi, look at this, number 2 news. Taiwan Semi and Nvidia launches first U.S.-made Blackwell chip in Phoenix. The first ever Blackwell chip has now been made in the U.S., so they have a new Phoenix facility. We're trying to not manufacture all our stuff in Taiwan because that's 6 feet away from China. But check this out. This is the best part why I love them. If you go to the revenue, this is insane. The revenue's up 35%. After it grew 41, so the revenue's up 35%. But the net income, the profits are up by 42 to 17 billion. They're legit doing 10 to 15 billion of after-tax net income a quarter. And at this growth rate, what's it going to be this time next year? It's actually nuts. Then they're sharing it with you, doing dividends and share buybacks. Yeah, look, so net income's up 42, but net income per share is up 45, plus the 1% yield. Hey, Casey, hey, that's awesome, man. I'm glad you made money on that one. So American Express, who actually owns American Express? Yeah, hey, me. That is the biggest risk there. Yeah, China is Taiwan Semiconductor's biggest risk. Any sort of like escalation of war fears okay. So AXP right here, that's in the Buffett portfolio. If you go to Warren Buffett's portfolio, he owns a lot of the higher yielding dividend stock names like Chevron, Coca-Cola, Bank of America. And his second largest holding is American Express. Oh, look at this. This app is telling me, what is this right here? There is a bullish continuation triangle, and the rise probability is at 82. Well, there you go. But yeah, honestly, yeah, that's an insane stock price. Look at the yield. You get a 0.66% yield, and they raise the dividend every year to keep up with inflation. It kind of looks like MasterCard and Visa stock. Yeah, hey, Maxi. Oh, sorry, I got to mute you, brother. Try not to spam there. But yeah, AXP, this is a good PE ratio. I mean, even though they're at all-time highs, they still only trade at 23 times PE or 23 times net income. That's pretty fair. Let's see, commercial services, international card services. I like the international card business because it's more growthy than the US. That's pretty cool. Yeah, hey, coach, if you want to get this app, by the way, this is a brokerage rebuy stocks on. It's in the link tree in my bio, first link there. But yeah, look at AXP. They're easily making 2.5 to 3 billion of net income a quarter. What are they doing with basically 3 bill of net income a quarter? Well, as we know, They pay a dividend. The dividend only cost $580 million. So since they have so much leftover money, they're spending $1 to $2 billion on buybacks a quarter. They spent $2.33 billion just on buybacks this quarter. 1.3, 1.2, 1 billion. So if we go to the net income, again, the net income's up by 15, but the net income per share is up by 18 because the share part of the ratio went down so much. So yeah, that Buffett is a shareholder of that one. Yeah. These are super investors, like Nancy Pelosi. They have to make all their trades public by SEC law. And so we can see their exact portfolio and their weightings and how they're performing. And you can batch trade follow them into it if you wanted to. Okay, so let's keep going here. Oh, wait, GSL. Let me look at Oklo, actually. We'll go to Oklo. So this is basically a nuclear momentum play. If I was looking for a real nuclear play, I wouldn't buy this one. This is a complete startup. They're worth $19 billion. That's what I can't believe. They're worth $19 billion. And again, if we go to the revenue, it says no data because they've never sold anything. They're a startup. They're trying to make these SMRs, these small modular reactors. But if you didn't know, there's only 3 working small modular reactors in the world, and none of them are in the US. So it's kind of a proof of concept here. No clear line of sight of revenue. And if I was going to buy a nuclear stock, here's the one I would buy that has real assets and real fundamentals is CEG, Constellation Energy. They're also pretty close to all-time highs. They've also experienced that same little downtrend recently from its peak. But they literally own, this stock is the one you want. They literally own 30% plus of all the US's nuclear reactors. Largest pure play for nuclear energy by far. There's no close second. VST would be the second place, Vistra Energy, but this is the one you want. Best nuclear play out there. They're actually my largest holding in here. So yeah, I'm totally biased. Yeah, I'm totally biased because I own them. But yeah, Oklo, if I was going to buy that, I couldn't pay it. Yeah, so I'd maybe try and take the loss eventually. Try and take the loss. Would you recommend taking the loss and move to a different stock? I'm down $50. Yeah, I would probably, I would start it today. Like I would go ahead and sell. Again, none of this is financial advice, not personalized advice, but I just don't love that one in the long run. But I maybe try and trim that one. I'd slowly trim out of it. Like I'd sell some even right now, maybe, 10% of it, but maybe keep a little just in case the momentum does come back. But yeah, you're going to want to put it in something else. Yeah. So Danielle said RIGL. Did you own any CTRE? I do not, but I love that company. Rigel Pharmaceuticals. So yeah, another super small one. They're worth $530 million. Yikes. They were $530 million. Was that a dividend or a reverse split? Oh my goodness. Let me zoom in here. That was a 1 for 10 reverse split. Okay, so this is really $3 a share, but they just reverse split it. Okay, do they have sales at least? They do. Whoa, actually, wow, they did $100 million of sales. That's really growthy. Like, hey, why is the stock at all-time lows? That's a bit odd, but $100 million of revenue, that can't be real, and it's real. $59 million of net income. Wow. I mean, analysts expected net income, but not that much. I'm actually going to put them on the watch list. That's actually shocking. Why is the stock doing so bad then? Maybe they don't have a moat or that's interesting, actually. Thanks for telling me. They would just deleverage their balance sheet too. That's great news. This was a great quarter. I mean, if they're already making 10 mil plus a quarter. What's the net income multiple? Yeah, they trade at 5 times net income. Why do they trade at 5 times net income? I don't know. But they're on my watch list now. We'll look at it. What happens is, hey, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, first link there. Full disclosure, it's an affiliate link. So if you deposit $100, we'll both get like some free stocks. But yeah, free brokerage, no fees or anything, no commissions, which is cool. Oh, by the way, all the brokerages I'm using, I'm not sure which one you're talking about, but all these brokerages I'm using are all in the link tree in my bio here. Yeah, I got multiple ones, but yeah, this one is my favorite. So let's go get GSL right here. I think this is a global ship lease. Yeah, so this is one of your they usually have high dividends. Let me see the yield here. So, yeah, look at that. You get a 6.55% dividend, but look at the payout ratio. The payout ratio is only 17%. So that's a safe payout ratio. They actually have room to raise the dividend. That's actually because I've looked into this company. They actually pay no taxes because they're headquartered in the Marshall Islands. They're headquartered in the Marshall Islands. So if we can actually go to their tax rate over here. If we look at the basically on the top right there, the tax rate, it says 0 because they're in a country where they had at one point paid 0.14% of the revenue in taxes, or their tax rate was. But yeah, 0% tax rate for their revenue. So that's how their margins are so high. But look, this is the great news. They're easily making 80 to 100 million in net income a quarter. Let's go see how much the dividend costs. Making 90 mil a quarter, and the dividend only costs 21 mil. They raise it. So yeah, the dividend is safe for now. These kind of stocks like Zim as well, they benefit from all the supply chain logistics issues and war issues and stuff too. So let's look at Meta right here. Then we'll look at SoFi. Yo, I love SoFi. Yeah, what up, Anson? I love Meta. Yeah, hey, Anson. Yeah, by the way, this is a brokerage where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So here's Meta. Again, this is a great Mag 7 stock. You just want to buy and never sell. Let's see, is there any news down here? Meta cut 600 jobs. Meta forms $27 billion data center joint venture with Blue Owl. Indiana proposes mandatory AI content labeling rules. Okay. Anywho, has anyone seen the new Meta glasses, like the Meta Ray-Bans, where there's like a HUD display where you can like scroll through reels? That's pretty cool. And Meta only trades at 26 times PE, which means they trade at 26 times net income. That's very fair. Yeah, hey, this is Moomoo, not Weebull. I do have Weebull though. But look, this is the crazy part though about Meta. Meta legit has 3.48 billion daily active users. Obviously, we know they own Instagram, Facebook, WhatsApp, and they literally just introduced ads to WhatsApp, by the way. So that's a nice earnings tailwind. There's also, has anyone heard of the Threads app? It's kind of like a competitor to Twitter/X. The Threads app now nearly has the same amount of daily active users as X does. So yeah. Meta ads are way nicer to work with than Google. Hey, yeah, the Facebook ads and the Instagram ads are so easy. You're right. And the cool thing about Meta ads versus YouTube, whenever you see an ad on YouTube, YouTube keeps 55% of it, and then they give me or whoever 45% of the ad revenue. But on Meta, there is no sharing. Meta keeps 100% of the ad revenue. Because they don't share revenue. Hey, people keep asking, by the way, if you want to get this is a brokerage, by the way, where you buy stocks on. They ask for a bunch of information. You get sent a tax form. But if you want to get invested in stocks, you need a brokerage. And all these brokerages are all linked in the link tree in my bio. I love all three of these. But if I had to recommend one out of all three of these, I'd pick this one, Moomoo. Link tree in my bio, very first link there. A lowest fee brokerage. And you can collect the APY on your cash and stuff. So yeah. So let's look at SoFi right here. I do love SoFi. I do own SoFi, by the way, please. Hey, yeah, we'll try and get to, we just looked at GSL. Yeah, hey, what up, Vitus? Yeah, give me the ticker symbol. We'll check it out maybe. So, Super Micro, I don't love that one. I'm up like 90% on Supermicro. So here's SoFi. Let's look at them first. SoFi is an absolute beast of a company. They're not just propped up on momentum like a lot of nuclear stocks, quantum stocks, AI stuff is propped up on momentum with no fundamentals. But in my opinion, or I'll just show you the numbers for yourself, they deserve this high valuation. They deserve to go up this much because of their insanely growthy financial services business. Wi-Fi? Please load. Will it load this one? So here's the lending revenue. Their main business, first off, lending, that's at a record of 30% year over year. But here's the main growth driver. Because, they're a fintech. They have their own banking charter. Their financial services are up 105%. After it grew 80. After it grew 222. After it grew 260. No analyst expected it to be this growthy. And if we go to here are the analyst expectations. The orange lines, what the analysts expect every quarter. Every quarter they beat on revenue, they beat on EPS, which is beating on net income, and they beat on EBITDA by like a wide margin. They expected 84, 125. I really just think people are taking SoFi serious. Sales are up 42. They're growing. What were the sales? The 850 million of revenue. Out of the 850 million of revenue, 100 million of it was after tax net income. Pretty cool. In full disclosure, I do own them. Is it too late to buy SoFi? Yes, it really is. With anything meaningful, like if you wanted to make SoFi 5% of your portfolio, I certainly would not do it today. Like it's hard to even nibble like on this name at this price. It's like they're trading at 90 times next year's net income. Like just think they're going to beat on those expectations probably. But the analysts are wrong every quarter. We just saw how they beat. But according to the analyst, SoFi trades at legit 90 times next year's net income. So that's I bought. I'm up nearly 5x on them. I bought them a long, long time ago, and I also regret every share I've ever sold. I sold a lot of them. Someone said Supermicro is sketchy. Here's the thing with Supermicro, and I do own them. They're also sketchy because of their accounting fraud issues. They were supposed to report earnings this day, then they just didn't report earnings, delayed their filing. So I actually bought them during that shenanigans. But here's what sucks about Supermicro. Here's why I'd avoid them. Really, over 40, like you can't buy the stock over 40. It's 48 today. I would recommend under 40 to really consider this one, just because they lost their margins. They're seeing a lot of increased competition. Like, look at this. The revenue's up 7.5. So the revenue's up 7.5, but the net income is down by 35. And that's not some one-time adjustment either. That's real. They're losing their margins. Margins are collapsing because they're giving customers bulk deals. But they have can get some new orders from like OpenAI and Oracle buying a bunch of new chips, and Supermicro installs it for them. Someone said, I just sold half my portfolio to go all into Mag 7. Hey, nice there. The Mag 7 just keeps on winning. What about the SPY? Yeah, I love the S&P 500. That's literally, that is just the S&P 500. Here it is right here. The VOO is another way to get into it. Do you only use 3 different apps, or I'm trying to find the best one? Oh, yeah. Hey, Trader Learner. What's up, dude? Yeah. Hey, by the way, if you want to get all 3 of these apps are linked in the link tree in my bio. My favorite one out of all 3 of these is Moomoo. It's the very first link in the link tree in my bio if you want to get this brokerage I'm on. But yeah, Robinhood and Weebull are both linked up there, and they're all affiliate links too. Is there any way to contact you on Discord or Telegram? Not really. I do have a Discord, but it's only if you want to. If it's something super important, it costs $1. So there you go. If you want to join my Discord, I made it $1 to join, the lowest amount possible. Just because I made it I don't want a lot of people in there. There's only like 11 people in my Discord. I don't want there to be much more people, because if I get questions, I like to answer them thoroughly. So. Yeah. Okay. Okay. Discord is in the link tree as well, or in the description. But I don't like to promote it. Has anyone ever heard me talk about the Discord? I never talk about the Discord, just because it almost sounds like I'm selling out. But I literally made the Discord $1 to join. It's one time $1. I just don't want there being any bots or any weird people ever in there. Okay, so PSIX. Let's do that one. Actually, I do own this one, and I found this one. I like it from their numbers. They're a $2 billion company, and the valuation is 17. It's actually a little higher. They're really trading at like 20 times net income, because they had a slight one-time adjustment to their net income. But here's what I love. Here's why I bought this stock. Here, I'll actually show you my position. Full disclosure. Yeah, look at this. I got 5 shares again. As much as I love this name, they're like a fun money name where you want to put only a couple $100 or like something insignificant in them. Like, I love them. I love their numbers. I trust them, but I only trust them with a little amount of money. So check this out. This is what I love to see in a company is growth. Check this out. The sales are up 73. So the revenue's up 73, and check this out. They made $51 million in net income on this. They're already making net income every quarter, but this quarter was a real big winner for them. Look, beat on, again, here's the orange line with the analysts expect. Huge beat on revenue, huge beat on net income, huge beat on EBITDA. Like, they're beating triple beat. I understand why they're rallying so much. Yeah, again, by the way, if you want, this is a brokerage software. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. Yeah, what up, Detox? Yeah, it's called Moomoo Brokerage. Let's see. I need to like pin a comment or something. Dollar. Hey, thanks, Weber. I appreciate that. Yeah, exactly, Looney. AAPL. So let's do Apple stock. What up, Tommy? Good to see you. So Apple right here. This is a great Mag 7 stock to just literally buy and never sell. It's tough to, buy meaningfully at this price, but if you have the intention to never sell, it's probably worth it to just buy even here, but not crazy here. But here's what's cool about Apple. We know they have a smartphone market share of 17%. That's kind of crazy. iPhone is literally half the revenue. So half the revenue is from the iPhone, but the most valuable part is actually their services business. Whenever you go buy something in the App Store, like you spend $100 on Clash of Clans gems, $30 of it, 30% of any revenue from the App Store goes back to Apple as legit a developer royalty. So they collect literally insane 100% margin royalty fees off that. Then they have the Mac sales, the wearable, then they have hardware sales. So they sell hardware and software on top of that. They're also affected by tariffs. Here's why. Did you know only 36% of the of Apple's revenue comes from the US. Then 26% is Europe, 17% is China. They print, basically 25 billion of net income a quarter. So yeah, 25 billion net income a quarter. And what are they doing with all that? Well, again, Apple pays a dividend. The dividend only costs 4 billion. So Apple will be a future dividend growth play because they have so much room to raise their dividend. It only costs 4 billion. And since they have so much left of their money, they're spending all on share buybacks. This is insane at the top here. They have the largest share buyback program of any company in the world. They spend $100 billion a year of their after-tax money. Think about that. Apple spends $100 billion, or they have of their after-tax net income solely buying back their own stock. And they've done that for eternity. Like in 2023, they were spending 15 to 20 bill. And before that, like they shareholder friendly. If you go to net income, that's why the stock never goes down. They just buy it back. But when you spend $100 billion, that could buy most of the companies I own. I mean, they just get they that's why they buy back their own shares. The government will not allow Apple to really get any bigger. Like they're already worth $4 trillion. They can't really allow Apple to buy another company. So anyway, I love them. I'm on an Apple iPhone right now. A lot of people are locked in the Apple ecosystem, but I don't know. I don't love its current price. What is the Max? Or yeah, it's called the Mag 7, or it's called the Magnificent 7. It's basically just the top It's Apple. Actually, we'll just show it down here. No, but yeah, it's Apple, Nvidia, Microsoft, Amazon, Google, Meta, and Tesla. I forgot, and Tesla. Okay. Let's see. HE stock, is that Hawaii Electric? Yo, does anyone remember, and this was a while ago, so you have to have a good memory, and this was big on TikTok too. Does anyone remember the blue tarp TikTok conspiracy stuff back when there was like lasers coming out of the sky? Look at this. Hawaii, actually, the huge fire in Hawaii, Maui, whatever, was caused, the blame is actually given to Hawaii Electric. They said that their utility poles burned down basically the whole state. So that's why the stock collapsed from 37 to $12 overnight, because they got blamed for those fires, and they really haven't been able to recover since. They had to sell off their bank. I was so sad about that. If we scroll back, it says now 100% of the revenue is electric utility. If I just scroll back to some random time, they used to have this bank asset. They were like the only Hawaiian bank, and now they had to sell it to raise money to pay off their debt. I mean, like, look, there was $1.3 billion fine. That's devastating. What's the market cap? $2 billion company. But they still have, of course, their utility assets, which will I don't know. It's just they're rough. It's kind of like the next EIX. Does anyone remember the California wildfires recently? Or on the exact date of it was on January of this year. Those California fires burning down those houses was blamed by Edison and International, EIX, the California utility company. So, okay. Hey, what up? Super said HPE. Yeah, then we can look at Verizon. Let's see. And then we can look at LGN. What up? Just appreciate y'all being here. We'll look at a few more here. Then I got to go in a little, but by the way, if you want to hit the follow button, we stream every single day, sometimes twice a day. We just look at stocks, and I sell nothing. I have no course book, WhatsApp. I'll never follow you, DM you, nothing like that. So here's Hewlett Packard Enterprises, HPE, a $30 billion company, but the stock has been flat for a while. Technically, the stock is the same price that it was in 2017. But what's the yield? You get a 2.25% yield. What's their valuation? So they trade at 27 times net income. Oh, 55% of the revenue is their server revenue. That sounds like it'd be growthy. Yeah, the revenue's up double digits. It's up 16. After grew 34. After grew 11. Actually, so they're on a bit of a streak of growth. That's a record this quarter, 4.9 billion. Yeah, it's never even been close to 4.9 billion before. Wow. So the server revenues had a record. Then they're in networking. How's that doing? Well, check out the quarter over quarter jump there, up 48%. Hybrid cloud sounds like some server cloud data center play. Revenues up 18%. The net income this is real too. That's rough. So the sales grew by 18, but the net income fell by 29. I think they're kind of seeing the same issue that Super Microcomputer is facing. They're giving customers these bulk deals, but they can't collect the same margin because there's nothing real. I have no IP or like to install. It's a commodity. Or I don't even know. I don't expect this stock to outperform, the S&P 500, but as long as it can keep up, as long as they can keep up their server, networking, cloud revenue, they're in financial services too. As long as they can keep up the growth, they're actually interesting, but I don't know if I expect them to outperform the S&P. So what up, Unbox? So the thing with Verizon is I wouldn't, if you are 10 if you're 10 years away from retirement or even less, maybe even like 5 years or something, and don't need dividend income, I wouldn't buy this stock, to be honest with you. If you didn't know, Verizon is literally the same stock price that it was in 1997. So, you bought that stock 28 years ago. You, you're buying this for the dividend. You're buying this to max out your dividend income because you get a 7% dividend here. It's safe for now, a 64% payout ratio, but yeah, you want to probably not own that if you're like a long-term horizon. So, someone said LGN Legions right here. Did you hear of Walmart buying shopping malls across America? I did not actually. Walmart buying shopping malls. Maybe should we look at Walmart stock after this? Well, maybe we'll do that. So here's Allegiance right here. So this stock literally just IPO'd in September. September 15th is when this company IPO'd. So there's not much data when we zoom out here. So we probably won't have much revenue data either. So yeah, here's all we get, these 4 quarters of data points. But look at this. We can't see the year-over-year comp. The sales grew 15. They're still struggling with, well, actually, they made 30 mil of operating profit. Looks like this is a company that does installation and maintenance. That's actually a sector I like servicing. Can't really be replaced by AI. And then they're also in engineering and consulting. Looks like that grew 28%. Again, we don't get too much data because they literally just IPO'd. So we kind of want to see them really prove themselves more, wait a little longer, but they seem pretty interesting. I remember reading up, they're on my watch list actually. They do HVAC and MEP, so heating, ventilation, air conditioning, and also MEP, which is mechanical, electrical, and plumbing. Where are they headquartered? U.S. Wait, let me verify. Yeah, California. Cool. Yeah, that's Allegiance for you. My HVAC play is my HVAC and MEP. This is a pure HVAC and MEP play as well. FIX. It's like the bigger version of that. And guess what, guys? This is my largest holding in here. I have basically 10 grand of this stock. They report earnings in an hour. Yo, I'm like so nervous, but I'm not really too nervous because I have confidence in this great company. But yeah, any miss on growth might collapse this name because of their high 42 PE. But they report earnings in legit an hour and 20 minutes. So that, wish me luck for that, guys. All right. Oh, yeah, Intel reports earnings. That'll be interesting as well. Yeah, thanks for that, Cactus. Yeah, I don't have too much thoughts on that one. Josh said Viking Therapeutics, VKTX. What are your thoughts on Nvidia? Ooh. Oh, and wait, TTWO. What up, King? Yo, that's GTA 6 stock. Yo, we'll check that one out. Excellent signal for, hey, I've never heard of that before. Trader Learner, I've never heard of that before, so I don't know. So here's Viking Therapeutics. Here's what happened. If we zoom out to this day, again, even now, they still have no revenue. If we go to the revenue right now, it says no data because, again, they've never sold anything. This is a startup. If we scroll way back here, the reason they gapped up this day is because they're a startup and they got FDA approval. That was great news. That FDA approval sent the stock up $100, and that was over a year ago. And we've just been waiting for them to finally sell a product, and they just still haven't. We are still, and that's also another reason why they fell that day. We're still waiting for them to report numbers. And look at this. Luckily, they have a good balance sheet, but look at these losses. They lost 100 mil of net income. Whenever you lose money, these numbers have to come from somewhere. And look at that. The assets just keeps declining every quarter because the net income has to be subtracted from the cash pile. But yeah, we just want to see this one finally start to sell something. So yeah. Somebody said, can you explain comfort systems? Yo, I have a great YouTube video. It's one of my most popular ones. A lot of people on my YouTube, I think, came from that video, but I have a whole video explaining comfort systems. It's basically a HVAC play, heating, ventilation, air conditioning with the best numbers I've ever seen. And they've actually been one of the best performing stocks in the entire stock market the past 10 years. What's the app called again? Yeah, hey, RZY, what up, dude? What up? Yeah, hey, Robinhood, yeah, hey, all these brokerages, by the way, are all in the link tree in my bio. I'm not sure which one you're talking about. Yeah, this is Robinhood right here. This is the Robinhood brokerage. Then there's Weebull and Moomoo. So they're all linked in the link tree in my bio. They're all affiliate links to full disclosure. But yeah, I love all these apps. This is out of all three of the brokerages, this is my favorite one. Lowest fee, most useful features. Link tree in my bio, very first link there. Okay, so let's see. Phil said MDIY. What is this one? Wait, I can't find that one. MDIY. I can't find that one. There's PMIDY, but I don't know if that's the one you're talking about. Um, it's on Cash App, so I threw a couple bucks in there. Thanks for checking it out. Understand? Yeah, hey, no problem. Hey, Miz, what's up, man? What dividend stock would you suggest for the best compounding effect? Hey, thanks, Adrian. I appreciate that. I'd probably go with some of the lower the low yielding ones that have a lot of room to raise their future dividends. The one that doesn't right now suffocate themselves with a high payout ratio that have a lot of future room to raise it. And fitting that criteria would be every single one of these stocks right here on the screen. This is called my dividend only portfolio. I just wanted to pick the most highest quality dividend. If you notice, all these stocks pay a dividend, but all these have very low yields, like Meta, Google, Constellation Energy, everything but McDonald's has a yield under 1%. But that's why I love them. And they make up for it in stock price appreciation, like Comfort Systems. This thing has a dividend of 0.18, but the payout ratio is only an 8, and they raise it every year. They've actually been raising their dividend like quarterly. So Looney said UNH stock. Let's check out UNH. You know who also just bought the dip on UNH? That'd be the homie Warren Buffett. You know, super investors have to make all their trades public, and he bought 3 new stocks this quarter. He bought UNH and LAMR. And again, that's why the stock gapped up so much. On the day it was disclosed, he bought the stock because Warren Buffett doesn't just buy any Joe Schmo stock. You know, he really does his due diligence. And that's why it was seen as a great sign when he bought the dip. So the sentiment has just been up and to the right ever since. So yeah, this is $360. I don't love the risk to reward on UNH right now because, yeah, Buffett bought it, but there's still some future risk. I mean, the net income is supposed to collapse down to $1.60 from $6. So like a really like 70% decline. But we're a customer though. We were literally a customer. We use their OptumRx. Their OptumRx is super growthy, but it's the future margins that are going to hurt. The U.S. government isn't too happy because UNH, like low key, is and was overbilling the federal government, giving those people that back brace they didn't need just so they could collect that $300 commission. Like, there is some sort of fraud, but I think the main reason the stock gapped down so much is because there was legit a high chance of UNH getting kicked out of Medicare and Medicaid for 5 years. But I think that risk is slowly being unpriced away. I don't know. It's a big mess. So maybe a small position, but not at this price. Okay. Hey, they have Zora crypto on Robinhood. Hey, actually, I don't own any crypto at all. And I kind of regret that too. I've seen how good Bitcoin's done and stuff, but yeah. We don't really. What's cool about crypto is that they don't report earnings. Like, that's kind of a unique feature. Like XRP and Bitcoin, they can't miss on that income. They can't miss on their net margin. So it's kind of like a catalyst-free like asset. Okay. How about Helvita Holdings? HELN. Let's check that one out. Let's do it. Wait, I typed in HELNAK FO, and unfortunately I can't find that. Well, let me type it out for you. HELVET. Oh, so here's the ticker symbol. Actually, look at the freaking no volume on this name. There's no volume. I don't know what this is. So it's first off, it's a Swiss company. Yeah, Switzerland, non-life. Yeah, hey, I wish I could give you more thoughts on this, but it looks like some international name that's a bit complicated. Like there's no chart. Like the volume's nothing. I don't know. Sorry about that one, man. And maybe if you got another stock you want to look at, let me know. Oh, geez, I just like swallowed air. Okay. Adobe, let's do Adobe. You know, this is one of the stocks that are being crushed by the AI thesis. You know, in 10 years from now, will we need Photoshop? You know, I know someone just made a great logo with ChatGPT that doesn't look AI generated. That would have taken me a long time in Photoshop. So in 10 years from now, will we need Adobe? That's kind of what's being priced in. But I always think we will. I think humans are always going to need the final touch on art. And as much as I believe that, I don't have any position in Adobe. I'd probably nibble on them here, maybe I wouldn't have it as a huge size position. I'd have it as a very small size position, but I'd still probably have exposure because I think they're underpriced right now. They're like the bad news is being overpriced in. I mean, they're trading at 21 times net income, you know, for Adobe. You know, I'm on their products every day, you know, After Effects and Photoshop. for my YouTube. And the numbers are still good. Like they're still printing money, basically 1.8 billion in net income a quarter. Here's all it will take for Adobe to rally up, I think. Adobe makes 1.8 billion of net income a quarter, over 2 billion of free cash flow a quarter, and they don't pay a dividend. So what are they doing with all this like leftover cash right now? Well, since the stock is so cheap, they're legit spending 2 to 3 billion on buybacks a quarter. But here's what I think Adobe should do. I think Adobe should buy a company. You know, there is some increased competition like Figma and all these other, what's up, Carvana? No, Canva, Carvana, Canva. There is some competition. I think Adobe should buy something. You know, buy a DocuSign. I don't know, just buy something. Do some M&A. They changed the rules on how crypto has to be reported now. Oh, you're talking about BMNR and MicroStrategy. Yeah, it's actually because of. So here's what was happening. These ETFs, people didn't know what they were buying with MicroStrategy. People just saying like, oh, it's just like some Bitcoin proxy. Well, here's what they need shareholder approval to do this now, which makes sense. But here's what MicroStrategy was doing, and this works great. This Ponzi works great in a bull market. But look at this. If we go to the cash and financing activity, again, if this is positive, that means they're either issuing debt or issuing shares. And in this case, they're issuing solely shares. They literally diluted you this quarter, Q4. They diluted you by $18 billion, which was like an insane amount of the market cap at the time, but it worked out. But they diluted you by 18 billion. And what did they do with that 18 billion? They bought 18 billion worth of Bitcoin, and that Bitcoin is now up like 30% plus. So that's how their assets legit went from 7 billion of assets to 64 billion. It's the Bitcoin they own appreciating, or it's the Bitcoin that they own. And ever so, they diluted you by 8 billion, 7 billion that quarter too. So every quarter it's basically just a pseudo Bitcoin play. And that's the same for BMNR. It's literally just a pseudo Ethereum play. It's basically the Ethereum version of MicroStrategy. Let's see here. Yeah, look at that. Revenue from self-mining. It's crypto adjacent. So I don't know. Hey, what up? Kudo said MVST. They tried to buy Figma. Really? Wait, was that the UK company? Wait, I remember they tried to buy some company, but they didn't get regulatory approval. Is that like a year or two ago, JVM? That was a while back. The thing I'm thinking of. But here's Microvast. Let's check out their numbers right here. I don't remember how they looked. So revenue, well, hey, that's good. The revenue's up 9 after it grew 12, after it grew 16. So that's good growth. Actually, whoa. So ignore the net income. It says they lost 100 million of net income. That's a one-time adjustment. I mean, it still made the liabilities go up by 100 million. Not great, but we go to the actual core business, the operating profit. They were the most profitable they've ever been this quarter. Like, that's really what you want to look at here. They used to lose 25 mil a quarter, but now they're actually like, I would look into what happened here, but they should be making like this quarter. They basically made 10, 12 million of net income this quarter in reality, but there was some sort of adjustment. Yeah, wow, look at the FCF. Free cash flow just exploded. 35 mil of free cash flow. All right. What am I clicking there? Okay. Yeah, hey, Lululemon, I'd be careful with Lululemon. Just not a stock I want to own. They just sell a commodity and they're kind of losing their brand value. The quality of their products have gone down too, I've noticed. But here we can see their stats, though. Their number of stores is at 784. The same time last year, it was 721. So they opened up a bunch of new stores. But here's the thing. Their comp sales, the U.S. revenue, the total United States revenue, their main growth market, the revenue only grew 1% year over year. That's not good growth. They're kind of losing their growth. But the international market, which has really been the growth story lately, all the international markets actually grew by 25% year over year. So when we combine the two, the total sales, the total revenue is up by 6.5. So the sales are up by 6.5, but the net income is down by 6, meaning they just lost their margins. They also have poorly timed a lot of the buybacks before today. They legit spent like nearly $1 billion buying back their own stock at like $250 to $300. But they trade at 12 times net income. Again, they just sell a commodity. They might just. I just don't love them. It's hard. It's a hard double, like with tariffs and everything. Like, I don't know. I just don't like the apparel industry. It's a commodity. It's low margin, super exposed to consumer trends, and but it could still do good. Like that one's not the end of the world. They're still making that. Lululemon still legit makes 200 to 300 million in net income a quarter. Like it's crazy. So, Rob said IBRX. What is that one? Oh, Immunity Bio. Oh, hey, $2.4 billion company at all-time lows. I don't know if we'll cover this one. But wow, actually check that out. A lot of liabilities to pay, not too much debt, but notice the growth here. That's very impressive. The sales went from 1 mil to 26 million. What are analysts expecting? And they're expecting 35 mil in 2 quarters. So they're expecting the growth to continue. Oh, but they're losing like 100 million of net income a quarter. But the losses are narrowing, but it's the fact that they lost 100 million the past 2 quarters. They've lost basically 15 to 20% of the entire market cap and net income. I love the growth. I love that sales growth, but the net income losses are terrible. I would very, very small position. ASML is my biggest position. What do you think? Hey, let's check out ASML. Yeah, they weren't allowed to buy Figma because they'd be a monopoly or something. Makes sense. Yeah. So here's ASML right here. This is your lithography company, your chip making manufacturer. They make the chip making machines for Nvidia, Samsung, and Intel. Those are like their only 3 customers. It takes like 2 Boeing planes to ship one of their machines. It's crazy. But check out they had a great quarter. Like they deserve to be doing this well. The numbers were good. If you look at the sales, the revenue, it's up 35. So the revenue grew 35. And so the sales are up 35, but the net income is up by 86. What does that mean in English? Means they expanded their margins. Their net margin went from 25 to 35. That just adds money to your bottom line. And you get a dividend. They changes every quarter. So that's kind of cool. Yeah, someone said SPHR. Yeah, this is we won't really cover this one, but this is, if anyone heard of the Las Vegas Sphere or like the Sphere I don't even know. It's like an IMAX kind of thing. I don't even know how to describe it. Like a movie theater, but it's more, anyway, they just started selling a bunch of tickets. Here's your, they're still losing 40, 60 mil a quarter. Another way to get exposure to the Sphere is actually through Vichy Properties. Vichy Properties is a REIT, a real estate investment trust, and they own the land under the Las Vegas Sphere. They triple net lease it. So the Sphere has to pay the lease every month to Vichy Properties. And this one has a nice 5.5% yield. This is your main Vegas REIT play. They own MGM Resorts, the Luxor, Caesars Palace, they own the land under all those. All right, maybe 1 or 2 more here, then I gotta go. But I hope you guys have a good rest of your day. QUBT, yeah, QUBT is a pure momentum quantum name. ARCC, is that Ares Capital? Hey, this is a BDC right here. Actually, we looked at the REIT. There's a BDC. This is just like a REIT where they literally have to, by law, pay out 90% of their taxable income in the form of a dividend. And I heard the BDCs have been struggling. They kind of don't do great in a lower rate environment, because think about this. What does this company do? They give loans to small, medium-sized businesses. They do not just them, but the whole sector. They do first lien loans, second lien loans, and then preferred equity and preferred shares of stock. And the reason companies go to them is because they can't get access to capital anywhere else. But in a lower interest rate environment, when money is easier to get, BDCs will, in theory, be needed less. But Main Street Capital is one of the better ones because they own a lot of, they do more of owning equity and owning shares in their actual businesses than more of the other ones. But I love the first lien loan ones like the BI. Actually, I don't love it. I love the sector, but not the ones who run it because of the dividend. Not BIZD, some other ticker that does just first lien loans. But anyway, like if the company goes bankrupt, they get the first rights to all the assets and all that. All right. Well, I got to go. All right. You know what? We'll cover. I saw this guy spamming this one, so we'll help him out. We'll do this one. CLF stocks. All right. Last stock we'll look at here. Cleveland Cliffs. Oh, and then I'll do a stock portfolio update after this. So after the stock, we'll do an entire portfolio update of all my portfolios here because we're almost green on the day. Hold up. So yeah, anyway, here's Cleveland Cliffs. This is a $6.5 billion company. I think Pershing Squared was trying to buy this stock, or not Cleveland Cliffs. That was a different company. But anyway, the stock has kind of been flat since 2018. Let's go look at their numbers. So I don't even know what they do. Cleveland Cliffs, steel. So they're in the steel industry, rare earth. So you'll see how steel making. I just clicked off it. That's not good. CLF right here. So steel stock, let's look at their net income. So unfortunately, this is why I would probably just stay away from this one. You get exposure to the commodity of steel, and probably will just do what like if you look at the actual price and commodity of steel, it probably will rhyme and do whatever that does. But this isn't good. I mean, they're losing. That's a lot of money, like a couple hundred mil of net income a quarter. But I know you're right. We're trying to bring back the steel manufacturing to America, and just a lot of the rare earth minerals I've noticed, like they're taking stakes into MP Materials, into LAC, Lithium Americas, and some of these other names, the government, because we're trying to be more rare earth mineral independent. So anyway, yeah, hopefully that was helpful there. So let me give a quick portfolio update. Oh, wait. Oh, okay. Sorry. So this is my Moomoo portfolio right here, where once I buy a stock, and if you look at the very top left, it's called my buy and never sell portfolio, because basically once I buy a stock in here, I try not to ever sell it. And these are all the stocks that we owned in here. And guess what? Wish me luck, because my largest holding in here, FIX, reports earnings in exactly 1 hour. So I'm either going to make or lose a lot of money on this one. And they're already at all-time highs, so I don't have great expectations. But yeah, Powell Industries, Amphenol. We just bought. Oh, we bought for the first. Well, not first time, but we bought one more share. Oh my gosh, Exxon. Here we go. We bought one more share of MUSA. Literally right before the stream, we bought it. And no way, they've actually gone up quite a bit from where I bought it. Let's see if I go to the 1 day right here. Yeah, I bought my share right then. But yeah, MUSA is my oil play. So that's our Moomoo portfolio. Then we have our Robinhood account. This is known as my dividend-only portfolio, where every stock in here pays a dividend. But almost solely for the U.S. military. Oh, thanks, Dry Bones. Yeah, Hernandez, thanks, man. Yeah, hey, Rambo, sorry. I think that's Celeste. Dude, Celestica, Rambo, is such a cool company. Like, Celestica deserves to be at all-time highs. But here's our dividend-only portfolio, where every stock in here pays a dividend, and every stock in here is also in the S&P 500. Here's our total percent change on every stock. So luckily, we are green on every single holding in here. Here's the S&P 500 as well. The S&P 5 or the QQQ is up nearly 1%. Is that a new intraday high? Basically, new intraday high on the Qs. That's great news. We're almost green because United Rentals reported earnings. They're down 7%. But we also have a Roth IRA, new intraday high on the Roth IRA. We've made a lot of changes in here. I'm probably going to make a lot more changes in the future. I don't really have I haven't named this anything. I haven't dedicated. It's not like a dividend only or never sell. I don't know. I'm kind of just trying to grow this to S&P 500 or similar returns. We started our Roth IRA basically a year ago. Oh yeah, let me show you my year-to-date in my main account as well. Our year-to-date, we're up 16%, way better than in April. We were down 13. Now we're up 16. The tariff fears, whenever there's, just don't sell. And then finally, we have everyone's favorite, my Weebull portfolio. This is my risk-on account where I buy a lot of super growthy, kind of risky stocks. I got some losers and some winners in here, like we're down on UiPath, Zoom, Sprouts Farmers Market, Progressive stock. We've been buying some more Progressive and Calm too. Then we have some medium stocks, and then, our super growthy names like AMD, Dave, Robinhood, SoFi. Yo, we're up 200. Whoa. Dave is up now 11% of the day. That's crazy. We're up 200% on them now. That's crazy. Here's the thing. Whenever you're up 100% on a stock, if the stock goes up 1%, you actually go up 2%. This is what's kind of crazy. Here's what people don't know, or it's kind of obvious, but if Robinhood stock right now, it says it was up 1%. If Robinhood just went up 1%, right here, I would actually go up by 8% because I'm up 800% from my original costs. Anyway, I'm going to go. Yo, Mikey, I'm so sorry, I'm ending the stream right now, Mikey, but I hope you have a great rest of your day. Thank you all for being here. If you want to hit the follow button, by the way, we stream every single day at the same time. We just look at stocks. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never, ever follow you. I'll never DM you. If you hit the follow button, I really appreciate you. But you might get followed by someone impersonating me. I promise you I'll never DM you or follow you. Not in a mean way. I'd love to follow you back, but you know what I mean? But I got to go. I hope you guys have a great rest of your day. Hey, best way to support me, though, if you want to support me, number one way to support me is just subscribe to my YouTube channel. I think I'm like 5 subs away from 9,000 subscribers. If you want to be my 9,000 subscriber on YouTube, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but just type into YouTube Nathan Robert. It's also in the link tree. But yeah, and Someone said, what was the app you're on? Yeah, hey, by the way, if you wanted to get any of these, all these brokerages, these are all where you buy stocks on. If you want to buy stocks, you need a brokerage. All these brokerages, all of them are all in the link tree in my bio. My favorite one out of all three of these, though, would be Moomoo, just because it's lowest fee brokerage. It costs nothing. It's free. And it's the most useful one. It has all the coolest tools. So anyway, see you guys later. Someone said short Meta. Oh, no. Why are we short Meta? Hey, thanks to everyone on the YouTube stream. Y'all are the best. Thank you so much. Oh, no, Johnson, no. Hey, thanks for subscribing, Kudo. I'll see you later, Johnson. See you, Beer. See you, Duels. Looney.